All right. I guess now's as good a time as any. Hi, everyone. Welcome to UCLA Anderson's inaugural Bitcoin Summit. Very exciting for me to be a part of and to be able to help organize and to see a lot of smiling faces here in the audience who are interested to come together and discuss kind of Bitcoin and its role in our society. But so I just first wanted to acknowledge and thank UCLA Anderson for providing us a place to have this discussion. The three centers behind this event, the Price Center for Entrepreneurship, the Easton Center for Technology, as well as the Fink Center for Finance, and the three student-run organizations, the Entrepreneur Association, Bitcoin Bruins, and Andertech. I am the founder of Bitcoin Bruins, which is a student community I created as a part of the Entrepreneur Association. I'm very passionate about both entrepreneurship and Bitcoin, and I think you're going to find that these conversations today will cover both pretty thoroughly. And so today is extra special, right? Bitcoin is something that doesn't often have a place for dialogue, whether in your personal home, amongst your friends, even in an academic setting. But today we have the opportunity to be a part of the most interdisciplinary conversation happening around Bitcoin on UCLA's campus, in my understanding, ever. As somebody that's been in the space for now 7 years, every time you get Bitcoiners together or people curious about Bitcoin, you find out just how diverse the people are that are interested in learning about this topic. And so why now? Well, all the trends are pointing towards the future being one that is disrupted by technology, Bitcoin being one of those that stands far and away, having a path towards being adopted. And so just looking back in the past 6 or so months, November 3rd, you have Larry Fink comparing it to an alternative gold. On December 5th, Bitcoin crosses $100,000, providing signal to the world that it is still alive and well, and people are seeking it out as global uncertainty becomes more and more common. On December 30th, BlackRock's ETF fund becomes the best performing or greatest launch in ETF history, showing the demand from institutions. On March 6th, the United States government signs an executive order to establish the Strategic Bitcoin Reserve. And so Bitcoin today, it has always been in conversation, the risk-reward opportunity. You know, early on, there was a lot of risk. There was not a lot of certainty of, the network, the power of the network, meaning how many people were using it, how regulation was going to support it. And today, after what we've seen just in the past 6 months, that risk-reward opportunity is incredibly clear where, well, the reward's always been there, but the risks are diminishing at quite a quick clip. And so just to give background to me, I found Bitcoin or discovered Bitcoin as an undergraduate at Miami of Ohio as a sophomore in 2017. It was funny, it wasn't in the classroom. It was from my peers in my fraternity, and they were always up to something, always researching, always being curious. And it was to my benefit to be in the same room and be in the same house as them. And so 4 years later, we attended Bitcoin Miami 2021. On the right is the photo with the Ed Carpenter racing team, which did the Indy 500 in Bitcoin decor. And that was a really exciting event. But I emphasize this to say, Bitcoin and youth, Bitcoin and students, they're hand in hand. A lot of, I guess I would just large it to youth in general, are curious. They want to see a better future. They aren't really clouded by what exists today as people that have, kind of seen the world become a little bit unstable and a little bit concerning. And so just to break down what today is going to look like, we've got 3 hours of panels. We'll get opening remarks from my colleagues Ben and Fred, which will break down, really, get you excited about Bitcoin, but break down its value. We'll have our 3 panels, which are going to talk about Bitcoin disrupting fintech, or DeFi, or traditional finance rather, Bitcoin mining and infrastructure, as well as Bitcoin in the next generation. There'll be 2 breaks in between the panels and a closing remarks before we kick off Memorial Day weekend with the networking event. Together, we're going to cover why Bitcoin matters. Hopefully you'll leave here understanding why now is Bitcoin's time, what Bitcoin is going to disrupt and how it's going to disrupt it, and how youth are going to lead the change, as well as whatever you want to learn, right? We have 15 minutes of Q&A for each panel. I hope you came prepared and curious. Please raise your hand. The panelists are excited to answer your questions. So just to recap, Bitcoin Bruins' mission when I founded it originally was to create a safe space for dialogue around Bitcoin. We've done that today. All of you are here to discuss Bitcoin, and that to me is an accomplishment. I'm going to be smiling throughout the day because I'm extremely, joyful that this moment is happening. It wasn't easy. But today's goal for all of us, and my goal for you all, is to understand Bitcoiner optimism just a little bit more. I stand before you as someone with complete conviction. There is no doubt in my mind of the future that Bitcoin has, and its path to it. Might be a little bit of a roller coaster, but if each of you come in with a varying degree of understanding of the asset, with an understanding of its potential to succeed in our society, hopefully at the end of the day, you will walk away feeling just a little bit more understanding of how someone like me feels, with unwavering doubt or confidence that it will be a part of our future. And so, curiosity today is the currency in this room. Please let your mind roam free. Ask bold questions. There's nothing, no thought to be left unconsidered. So now I will welcome Ben and Fred wherever they just walked out, but they will be back.
I'll go grab them.
Thank you, William. Ben and Fred, I'll give a short introduction. They've had a relationship for a long time. They work out of, we work in Santa Monica, and I had the pleasure of being a part of their team when they planned Bitcoin First, an unconference at Casa del Mar in the fall, as well as they co-authored the Big Bitcoin book, which was shipped out to, it's kind of your, at least my favorite coffee table book for Bitcoin, was shipped out to senators and news desks. And the two of them, Fred has a PhD from Stanford mathematics, and Ben is actually a Bruin himself. And so to have them back on campus, they have been here a few times before, sharing with the students in Ben's class. That's Benjamin Tsai's class, but they're always fantastic. So I hope you enjoy. Is Ben around the corner?
He should be.
All right, I'll get it set up, but give us 1 second. Thank you.
Great.
Hey, all right. Hi, everybody. We're here. I brought my flag.
Wow, I love it.
I made this flag in like 2015, but we just got kicked out of it, so set up our flag here. How are you guys doing? Good. Sorry, we're running all over the place today. Okay. Check. Okay, no clicker, but
Right.
all right, guys. I'm Ben. This is Fred. I think I want to start off today just by saying hi. How are you guys? Thanks for being here. Thank you, Kyle, for putting this on. Kyle, amazing. I love your passion for Bitcoin. And we're hoping we can imbue in you some passion for Bitcoin today if you don't already have that passion in Bitcoin. And I wanted to start off by looking at what changed in 25%. What changed? What does this mean, Ben? Well, we're going to look at what's changed between November 12th, which is the last time we were here in Anderson speaking, and today. And what's changed is this. Next slide, please. Well, we were at $88,000. Say we're at $110,000. About, maybe 109 now. Okay, but since I made this slide, we have volatility day to day, right? But essentially, it's 25% difference in price. So if you were here in November and you listened to us, you got excited about Bitcoin, you bought some, you told people about it, well, you're feeling pretty good today. And hopefully 6 months from now, when we come back again, because we'll find some reason, we can do what changed again then. So I guess the first thing I wanted to figure out is sort of how much do you guys know about Bitcoin? And so I had this idea of doing a little trivia, and we're going to give away money. Does anyone want to win some money playing trivia?
I want to win Bitcoin.
Okay. All right, you want to win some Bitcoin? Oh, maybe. Some Satoshis? All right. It's going to be really fast trivia, okay? So I'm going to ask you guys questions. You raise your hand. The first hand I see, I'm going to see if you get it right. If you get it right, you'll win a prize. So what is the total supply of Bitcoin?
Yep.
Okay, good one. All right, come on up and get your prize. You've won. All right, let's talk about the prizes. These are easy ones, honestly. So we're going to start off easy. The easy ones, you're going to win $5 billion in Zimbabwe bucks. Okay? The real money from Zimbabwe. Okay. All right, next. What's the smallest unit of Bitcoin?
Satoshi.
Right, come on up. You win. Okay, now what was bought for 10,000 Bitcoin? Yep. Okay, come on up. Get your money.
Today was pizza.
Wow, we're giving away billions of dollars here. Who created Bitcoin? Right there in the middle.
Satoshi Nakamoto.
Okay, good. Do you know who he is?
No.
Okay. What's Bitcoin's symbol? The ticker symbol. Does anyone know? Yeah.
BTC.
That's right. Okay, come on up. You won $5 billion. Okay, now we're going to the medium questions, okay? Medium round. Now you're going to be able to win 10 billion Zimbabwe bucks, okay? Big time. How often does the Bitcoin halving happen? Yeah, in the middle.
Once every 4 years.
210,000
Yes, but we want a more precise answer.
More precise answer.
Yes?
210,000.
210,000. That's right. Zach, you won $10 billion. Congratulations. How long does it take on average to mine one block?
10 minutes.
That's right. Wow, his hand was up before I even finished the question. That's Jeopardy style. What's Bitcoin's consensus algorithm?
Proof of work.
Yeah, that's right. Wow, you're really good. This guy knows his Bitcoin, man. He's making money. Who got the first Bitcoin from Satoshi Nakamoto? Does anyone know?
Adam Black?
Nope.
How Finney?
Hal Finney, that's right. You got $10 billion right here.
Yeah.
Okay, very good. What day is Bitcoin Pizza Day?
Yesterday.
Yesterday, okay. Everyone kind of knew that one, but you can come up and if you think you won, here's $10 billion. Okay? All right, now we're going to go to the round three. These are the hard questions, okay? We got some harder questions here. You may not even know the answer. These are probably things you can't even Google. Does anyone know what major feature is missing from the Bitcoin white paper? So when Satoshi released the white paper, this was not in there, but it's a big part of what it is today.
Multisig?
No?
Who he is?
Nope. Come on, people. I guess you don't know this one. It's okay. The answer is the 21 million cap. There was no cap in the plan. So there was no max supply. That was added later. All right. How about what is a UTXO?
Dylan.
Yeah?
It's a transaction. Basically, it's a group of
What does UTX stand for? UTXO.
unspended transactions.
Unspent transaction.
Spended.
No,
Unspent
it's the unspent transaction. Anyone else?
Unspent transaction output.
That's right. Okay. Yep. Come on up. You got 20 billion. All right. What does HODL stand for?
Give someone else the dollar, but
Okay.
hold on for dear life.
Hold on for dear life. Okay. Come on up. Here you go.
Get me a couple.
All right. Now, okay, this is a good one. So this one, we're actually going to give away the grand prize here, which is we have a copy of the Big Bitcoin book that Fred and I wrote. Have you guys seen this book? It's a really beautiful coffee table book, art book. And the question is kind of tricky, but do you know what Bitcoin's spirit animal is?
The honey badger.
That's right. Here you go, Zach. Wow. Good one. All right. We have a winner. Yeah, of course. We'll sign it for you too. So come to us afterwards and we'll sign it. All right. Well, that was fun. That was good. There's some people here who really know a lot, and some people here who probably don't know very much. And I'm like, what the heck are you talking about? What's a honey badger? What is this stuff? Anyways, we can explain that later. Let's look at the next slide, Kyle. So who are we, right? Let's talk about that. I'm Ben Sigmund. I'm class of UCLA 05 and Bitcoin class of 2012. I'm an engineer, an entrepreneur, an author. That book. I wrote that book with Fred. So Fred's a Wall Street trader. He's got a PhD in math from Stanford. He's multi exits. I mean, something like $500 million in exits and 13 companies or something crazy. He's got 160,000 followers. And so,
Bitcoin class of 2019.
Bitcoin class 2019. So he's a youngin' in that sense,
I'm a noob.
Now, why was Bitcoin created, right? So let's really talk about what's the roots of this thing. This is a big part of that book that we wrote. And this is not content from the book, but there is some book content in here. But there's a problem with money. And the problem is the government can't resist printing that money. And as the governments print, the currencies collapse. And the entire story of fiat is the story of government-run money always collapses. It's eventual, eventually it all does, from Rome to modern Argentina to the United States. Next slide, please. And Satoshi knew this problem, and he kind of was thinking about this back in 2008, 2009, until 2011 when he disappeared forever. And he kind of said, we can't trust the banks. We can't trust them to run our currency because they have this insatiable appetite to print money and debase the currency, right? Next. And so Satoshi's like living through this chaotic financial time where the markets are completely erupting downwards. The faith in all of the institutions is crumbling. People just feel like the ground's crumbling out from underneath them. The banks are failing. And he had this idea of an alternative that would be completely trustless. So you wouldn't have to trust anyone. All you have to do is read the code. Right? And everyone runs the same code. So next slide. And Bitcoin has essentially these three properties, right? A very simple way to understand it is it's scarce. So there's only 21 million. It's immutable. There's 18,000 nodes running it, and you can't change the code without all these nodes having to update their nodes. So it's very difficult to change, including the history. The history of Bitcoin, you can't change that at all because that's running on all these nodes too. Imagine trying to convince 18,000 really stubborn people to do anything. That's what it's like. And it's decentralized in the same way. No one controls it. Even the developers don't, if any of you have been following what's happening recently, but the developers can't even change Bitcoin. They were trying and everyone said no, and they were thoroughly attacked and eviscerated online. It's crazy. Next slide. So Bitcoin is rules without rulers. Those rules are in the code. And that's kind of what Bitcoiners say is we have rules without rulers. These rules are the math and the code, and it's the only money that the world can trust because it's completely transparent. So every currency eventually fails, but Bitcoin won't. Now, Bitcoin today, what is it good for, right? What's it good for? What's it being used for? Well, number one, we have it as a store of value in collapsing economies. It's completely portable. So if the people want to leave their collapsing country with their Bitcoin, they just remember 12 words, they could take it anywhere. That is so powerful. And also has no borders for remittances. So you can send it completely borderless, like a bird. It has no idea there's a border between the US and Canada, or there's an ocean dividing. Does not care, can fly straight across. And it also makes it censorship resistant, right? So no government can censor who spends Bitcoin, when they spend it, how they spend it. In fact, no one can, not even governments, but no one. And it's a base layer for a completely new financial industry. What does that mean? Well, I'll tell you, for example, I run a company today that gives loans against Bitcoin. So Bitcoin is treated as pristine capital where you can take your Bitcoin, put it into a permissionless vault, and borrow against it. And this is just one of the many things that I think are going to be built on Bitcoin, with Bitcoin. We're going to hear more and more of that in the future. And that's why it's relevant to you guys here. Steel, oil, obviously there's revolutions that shape the world. And this one shapes money. So you don't have to mine it or trade it. You do have to think, use, build, question. And you're early. You're early. Now we know you're early. Next slide. Because only 1% of the world population has Bitcoin still. When Fred got in 2019, many people would feel like that was late. When I was looking at it in 2012, it felt so late. It felt so risky. I honestly think it feels less risky today. And the call to action for you guys here in this room is to really take this opportunity, seize it, don't sleep on it, to understand what Bitcoin is and to figure out how you can use it in your lives and build something that empowers people, right?
Thanks a lot, Ben. A lot of these slides, some of these slides are from our book, so we're very, very proud of these slides and very minimalistic way to look at Bitcoin. I want to show you something completely different now, which is, my background is math, and I want to try to convince you of really the math of Bitcoin. I know you guys are somewhat quantitative, And I want to convince you deep down that Bitcoin is really going to go up for probably the next 100 years. And I'm going to try to use mathematical arguments to explain that. So I want to really, and I am part of a group of mathematicians that we all talk to each other, and we're all into Bitcoin and math and applied math and physics and astrophysics, right? And we're all super good friends, and we all gone over all the math and everything. Some of the slides from my friend Matthew Mazinski, who's a Latvian, who's not a math guy per se, but he understands math really, really well. And so some of the slides are from him, and you can see some of his work at porkopoulos.com, and also on Twitter, OneBaseMoney. So the first thing I want to tell you guys is this. Everything in finance, everything is exponential except Bitcoin. So Bitcoin is not exponential. So what are we talking? What is exponential? Let's go to the next slide. Well, money printing is exponential. The growth of money supply, the big money supply, M3 used to be, right? Or M2, global M2, these are all exponential, right? So essentially what Ben was saying is governments can't resist. They're always printing, and they're printing at a really high rate, right? So inflation is not as measured, it's not 11%, but the inflation of the world's money supply is 11%, right? So that's really bad because that money supply eventually goes places. And where does it go? It goes into houses, which is why you can't buy a house in Los Angeles for $250,000 anymore, right? Because all that money supply first goes into assets, and then after that, it goes into high-end services. It goes into everything that's scarce, and it's going into Bitcoin, too, because Bitcoin is the most scarce thing in the world. Another thing that's exponential is stocks, right? So stock prices, people invest in stocks because if they just put their money in literally in dollar bills under their mattress, they're going to lose 11% of it every year. Well, you can somewhat fight that by buying stocks, right? And so, the entire financial industry, and, you're in a graduate school of business, and the entire financial industry is really there to try to fight this money printing, right? And stocks is probably the best way up until Bitcoin to do that, right? And everybody knows the 60-40 rule. You buy stocks, you put them in your account, you buy the Vanguard, you index, you don't sell your stocks, and that's been a pretty good strategy in general, right? To do. And that's, especially guys my age, we own a lot of stocks historically, right? Because we've been brainwashed to buy stocks from a relatively early age. Well, you can also buy bonds, right? Bonds are safer than stocks. They generally go up. They don't move very much, right? You can put your money in 1-year T-bills, and they're not going to move very much, right? You're going to get 4.5%, right? And you'll get more if you put it in a 10-year bond or a 10-year corporate bond. You're going to compound out at 5%. Bitcoin is not exponential. And that's the first really important thing to understand. People say, how much does it go up? And it's like, well, it depends, right? It's going up a lot, but the rate of change is going down. So let's go and take a look at the next slide. Right now, the trend line for Bitcoin is it's growing at 44% per year. It's insanely high, right? It's growing at 5 times the stock market, right? So, it is true that we say in Bitcoin, number go up. We're all about number go up. Well, sometimes number does not go up. In 2022, number definitely did not go up. But if you statistically regress it, as we're going to start showing, it is growing at 44%. But that number is going down, okay? So this is kind of, if you map the price of Bitcoin versus time, right? And you look at it on the y-axis, you look at it in terms of the log of price, right? And you will sort of see that we started out and, the first pizzas were about Bitcoin at 10 cents, right? That was 15 years ago, right? And then we kind of get into, 2013 when Bitcoin finally hit 1,000, 10 to the power 3, right? And then we kind of get into 10 to the power 4, right? Which was the first time was in mid 2017, right? And then we got to 10 to the power 6, 10 to the power 5, excuse me. We got to 100,000 not so long ago, right? We got in November, right? And so this is the curve, and you'll notice that this curve sort of flattens out, right? And what that's saying is that the growth rate is decreasing, right? So we're at 44%, but in 2017, it was 150%, right? So we are going down and stuff, but it's still way, 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 way more than anything else in the entire universe. There's nothing else you will see that's growing at 44%, which is why you want to own it. Now let's take the same chart, the next slide, and instead of putting just the y-axis in log, I'm going to put the x-axis in log. So now I'm looking at time, but I'm not looking at time in years since Bitcoin was launched in January 9th of 2009. I'm looking at it in log of years, right? And now we notice this incredible graph that there's this linear relationship. And, you know, when the first time I saw this, I just was like, my jaw just dropped. And I was like, my God, this is unbelievable, right? There's this, Bitcoin is completely predictable. It's like, it's literally following this graph, right? And the fit is 96%. So the R squared on this thing is 96%. Let me tell you, now I did basically my PhD in the statistics department at Stanford, and I can tell you, you do not get 96% fits like this over 15 years for an asset that grows from 10 cents to 100,000. So it's gone up 1 million X, and it fits this thing by 96%. This is not random. Okay, this is not random. This is a growth pattern of the asset. And so we also can, if you go back one more time, we can look at these percentiles, right? And we sort of see most of the time it's kind of in the, it's within 2 standard deviations of this trend line. Occasionally it'll get to 3 standard deviations like it was in 2017, right? But we also have some idea of the quantiles of this, how far are we right now? So we can look right now. We're pretty much at trend line. We're just a little bit above trend line here at 100,000. Trend line is just 100,000. We're at 110,000. So we're 10% of trend line, right? In a boom cycle of Bitcoin, we tend to go 2x. That's 1 standard deviation up. 4x, okay? That would be 2 standard deviations. So for Bitcoin to go to 400,000 from here, not crazy at all, right? That's kind of compatible with the kind of stuff that we've seen so far. So let's go to the next slide. There's another. Oh, yeah. So slowing compound growth. We talked about that. This is an interesting chart, which sort of says how long is it going to take to double? And if you look on this chart for 2025, we're doubling every 2 years, right? Which is sort of this rate of about 45%, right now. Doubling your money every 2 years, that's interesting, right? You kind of like to do that. But where is it going to be by 2035, in 10 years? Well, you're going to be doubling your money every 3 years. Still pretty unbelievable, right? Now, you can run this thing out, and you can see that actually you're going to still be beating stocks for at least another 30 years. And if you invest today, you're actually going to beat stocks for an amazing 100 years, right? So if you buy Bitcoin today, you will outperform the stock market for the next 100 years, okay? So your great-grandchildren will actually be better off than the great-grandchildren of the Vanguard Bogle guys. So next slide. So the current CAGR is 44%. That's really the most amazing stat right now. Let's go to the next one. So it's going to outperform stocks. It really is the top asset. But what about the volatility? That everybody asks me that. Fred, but the thing is so volatile. Surely you can't expect me to put a lot of my money into this incredibly volatile asset. I have one word for you. 2 words. Deal with it. Okay? That's it. Deal with it. Like, there is no way you're going to hedge yourself against the volatility. It's inherent in Bitcoin. It's the price you pay for this asset, right? The only reason this asset can go from 10 cents to 100,000 in 15 years, the only way it can do that is by having this massive volatility, right? So this volatility is inherent to Bitcoin. Now, let's take a look at these things. How long did it take to go between these different areas? Well, from zero to $10, right? That was from the first transaction, which was in 2010. That was at 10 cents, okay, roughly. And then to $10, that was 674 days. So just a little over 2 years, right? In 2012, we hit that number, right? Then from $10 to $100, that was, it only took one more year. So the beginning of 2013, we hit that. And then then we went from $100 to $1,000, and that took a couple years. And then from 1,000 to 10,000, that was from the end of the beginning of 2014 to January of 2017. So we had this complete nuclear winter from the Mt. Gox thing. Bitcoin was dead. We all thought it was dead. I thought it was dead. And of course, it roared back in January 2017. And then from 10,000 to 100,000, well, it almost did it in 2021, right? It got to 69,000, but then failed. So we only got there, and it took us a grand total of 1,887 days. Now, I looked at this and I said, ChatGPT, how long is it going to take to go from 100,000 to a million? And it said, well, Fred, it takes on average about 1,000 days to go up 10x. Right. But, the first 2 years, so they're outliers, and it might be a little less than the previous one. So I'm going to tell you about 1,200 days, right? So my point is this. There's a lot of reason why you have to believe. If you look at the power law, if you look at this simple calculation, we're probably going to get to 1 million sometime between the next 5 years or 3 to 5 years, or maybe 10 years, okay? But we're going to get to a Bitcoin 1 million. It's going to be a thing, right? And then, whether it's 1 million, 2 million, 3 million, who knows, right? But we're going to go from 6-digit Bitcoin, which we are kind of currently at, to, 7-digit Bitcoin. So that's for sure. Next slide.
38 days then?
No, we've been 38 days. We're in that world now. We've only been there for 38 days. Anyways, so all I'm telling you is this thing is a rethink of everything you know about finance, about the world, right? Because our entire financial system is based on fiat money, stocks, these lower rates of return, not dealing with Bitcoin. Once you throw Bitcoin in there, it changes everything. Like every single investment advisor is going to have to rethink what they're teaching. Every single person, Bitcoin is now the 5th biggest asset in the world, right? So you have gold, Microsoft, Apple, Nvidia, Bitcoin. It has surpassed Amazon now. It's surpassed Google. So you're not owning Bitcoin is not even an option anymore. It's just how much should you own? Now I want to tell you one more thing. How do you explain this power law, Fred? Like why? And when I first saw this, I was like, I got to understand why does it behave like this? Why do we get this thing, which is roughly to the 6th power, right? Very interesting to me, just like mentally, why do I get it? Well, there's really 2 factors here. The first thing is Bitcoin, it's a unique piece of technology. It's a unique piece of savings technology. And it has a couple advantages over anything else in the world. The first advantage is you can't confiscate it, right? So if I have my Bitcoin, I know my seed phrase, you can come to me and say, Fred, give me your Bitcoin. I can say, no, I can give you some other Bitcoin, but you would never know if you gave me my Bitcoin. You don't know unless I show you my public key. You can't tell how much Bitcoin I have, right? So it's perfectly non-confiscatable Bitcoin. It's also something that I can move at my will anywhere in the world. So I can give it to my son who's going to be attending NYU this year. I can move to Iceland if I wanted to and take my Bitcoin. Yeah, so this is portable wealth. We've never had this. This is not gold. Gold is not portable wealth. Like moving a bunch of bars of gold to Iceland is not going to happen. Just giving if I live in China, I can give my daughter who's going to be attending UCLA some Bitcoin, and she can use it, right? So this is truly a different kind of animal than anything we've ever seen. And people are realizing this, right? And as they realize this, they come into this ecosystem and they want to buy some Bitcoin.
Fred, 2 minutes.
Okay, yeah. And so the number of people who own one Bitcoin is going up very regularly. Also a power law with a 98% fit. Amazing. Go to the next slide. So the amount of non-zero addresses is going up as the cube. So we have this cube rate of sort of people who are interested in Bitcoin. And the Bitcoin price is really the square of the interest in Bitcoin. So what I'm trying to say by that is if there's twice as many people interested in Bitcoin, the price of Bitcoin goes up by 4. It's a quadratic formula. And very last example, let's suppose there's 2 million Bitcoin that are freely available, and there are $200 billion worth of stable coins that are sort of competing for those Bitcoin. Well, if you ever look at an AMM, you'll say that that means at a price of 100K. So that's kind of roughly where we are now. What if that supply is reduced to only 1 million Bitcoin? Well, if you want to get to a constant product, you're going to need 400 billion Bitcoin, billion dollars against it. And what that means is the price goes to 4x. So doubling, reducing the pool by half quadruples the Bitcoin. So we have this quadratic formula. And so that thing I'm going to call Fred's Law. And thank you. That's it.
The unveiling of Fred's Law. You saw it here. You could tell your friends. Kyle.
Great. Well, thank you very much, Ben and Fred. You guys are going to now take your seats. Yeah. And welcome Professor Eisfeld to the stage, as well as Andy Hu. Feel free to come on up. So, the microphone to pass in between, if you'd like.
Okay.
Andy, would you like to be on this side? Yeah. There we go. So just welcome my friend Andy to stage to moderate the first panel. Andy is also graduating in June, a member of the IFA and a background in wealth management. And he'll be facilitating the conversation on what financial sovereignty looks like in a Bitcoin world. So, Professor, also.
Okay. Good afternoon, everyone. My name is Andy Hu. It's such a pleasure for me to be moderating today's first panel. So we have 3 panels prepared. Each will have a different moderator, so you'll see new faces every 30 minutes or so. So without further ado, I wanted just to take a moment to reintroduce the 3 amazing panel speakers we invited today. So first, we have Professor Andrea Eisfeld. So she is a distinguished finance professor here at our UCLA Anderson faculty, as well as a endowed chair for our Fink Center of Finance. She's known for award-winning research in asset markets, and she actually developed and taught one of the first class here at UCLA Anderson on cryptocurrency and fintech. And she is also active on the industry. She served as a chief economist for a hedge fund. She was a fintech advisor. So she brought deep insight into how our financial system evolved, both in theory and practice. So again, that's Ben. He is a UCLA alum. So he's founder of Bitcoin, Libre, right? So the way I first look at this word Libre, I think about it as you're leading because you're brave. So we pronounce it as Libre. Okay, so you bring 2 decades of engineering experience in the crypto space, and you're building tools to make Bitcoin accessible to everyone. And you and Fred co-authored the Bitcoin book. For sure, I will get a copy just right after the meeting. Last but not least, we have Fred. You are a Stanford-trained mathematician, but also a serial entrepreneur behind 9 successful startups that's worth over like $500 million if that's correct. You're co-author of the Bitcoin book, and then you're also actively pushing in the crypto innovation space, such as decentralized AI-driven blockchain networks, as well as a number of consumer crypto projects. So now, before we dive into our conversation today, so we want to talk about the mechanics of Bitcoin-backed lending, which is what Fred and Ben are specializing in. Let's take a step back, right? So we know traditional finance has a lot of critical pain points. There's a lot of intermediary involved. When you're doing a wire transfer, you have to go to our banking apps. There's a lot of intermediary involved. So there's a lot of slow settlement. So blockchains certainly have targeted solution for that. But the question is, can smart code really replace these trusted institutions? But also, can it scale safely and equitably? So I want to just first start it off by have Ben and Fred doing like a quick one sentence hook. So first of all, for Ben, what is the problem that Bitcoin Libre they're trying to solve?
Yeah, so Bitcoin Libre is all about freedom and accessibility of a financial system to everyone, anywhere in the world, regardless of where you are, as long as you have an internet connection and a mobile phone. And the problem we're solving today is specifically related to Bitcoin lending. So if you have Bitcoin, you can borrow against your Bitcoin from a decentralized pool of capital, where multiple pools of capital, where people can also provide capital on that side. So essentially, it's a two-way marketplace for Bitcoin lending, which I can explain more later.
Okay, yeah, with Fred. So what does supporting the success of Bitcoin Libre mean for you?
Well, look, I think that one of the things that we know as Bitcoiners is that the killer app Bitcoiners don't want to do anything with their Bitcoin. They do not want to give their Bitcoin to people. The only thing they want to do is not sell their Bitcoin. Right? So the killer app we think of Bitcoin is anything that'll allow a Bitcoiner to hold on to their Bitcoin. And so, we have these unexpected expenses that come up, and people like to, get in debt and run the debt a little bit because the Bitcoin is going to grow faster than the debt. So that's the fundamental problem that all lending platforms address, I think.
Mm-hmm. Okay, so I guess my question is, now you're using Bitcoin to really revolutionize the way people can use Bitcoin as collateral and then borrow against that, right? So for Professor Eisfeld, I guess just for people maybe who are outside of finance, what is the basis of maybe collateralized lending, I guess, why that's a huge part of just traditional finance in general?
Sure. So let's think about if you're a lender, you own essentially a claim on someone's assets, and that's going to give you some cash flow rights and control rights. And what does collateral do? It's going to harden your control rights and your cash flow rights in the bad state of the world where your lender defaults. So then that means that collateral typically has a few standard features. It is liquid. It has a price that can be verified. It has ownership or property rights that can be verified. And it is transferable in terms of property rights. So, and it also tends to have a fairly stable price. So I think the interesting thing about Bitcoin is it satisfies most of the things that we typically use as collateral. So US Treasuries being one of the key examples, your home, that's another really standard piece of collateral, mortgage-backed securities, all of those have debt capacity that can be as high as 95%. Bitcoin has a lot of those properties in the sense that it's has well-defined property rights. It is liquid, and the main difference is that it's very volatile. And so I would imagine that that's something that we might talk about down the road.
Mm-hmm. Yeah. So obviously, traditional finance, they have already a very established channel and ways for them to do collateralized lending. So I'm curious to Ben. If we can walk through a simple example, let's say if I own one Bitcoin and if I want to borrow 50,000, so how does it work through Bitcoin?
Yeah,
Libre?
I'll tell you how it works, and I just want to also address that Professor Eisfeld's completely right. There is a high volatility index to Bitcoin, as Fred was saying earlier, and that's why on Libre we only allow 50% of the value. So if you have one Bitcoin, you can borrow today about $50,000, $55,000 against it. But let's say in this example you want to borrow 15, right? Well, it's very easy. There's no forms to fill out. You don't need any ID or email or phone number. You download a mobile app, you generate an address. The network of nodes generates an address for you. There's no private key. There's only shards of this key that exist. They give you an address to deposit into. That's your vault. It belongs to only you. And then you put your Bitcoin in there. After one confirmation, your Bitcoin shows up in your vault, and now you can borrow $15,000 instantly, take that cash in the form of Tether, and do whatever you want with it. There's no limitations.
Woo! Cool. Yeah. So, if we imagine a world, let's say 5 years down the road, Fred already show us that exponential growth picture. You also shared why fiat currency has a very high likelihood to fail. So if we envision a world now, Bitcoin is massively adopted by everyone. Now, instead of 1% of people use Bitcoin, maybe 10, 20% people using Bitcoin. So imagine in that world, then how does really Bitcoin Libre separate itself from maybe some of the other competitors who are also doing this sort of Bitcoin lending?
So there's a lot of different ways you can borrow. There's a lot of different kinds of lending platforms, right? So you can go to certain people, sign a form, and you're literally going to have a traditional lender that will hold your Bitcoin for you, and you have a contract with that person, and they will hold the Bitcoin for you, and they will liquidate it out. Now, what Ben has built, and I've helped build with him, is a full DeFi situation. So there's no counterparty. There's no company that you're lending the Bitcoin to. You're lending your Bitcoin to basically a blockchain, right? And it's completely automated. So the difference is some people will prefer to have a counterparty. Some people will not want to have a counterparty. Some people will prefer to just have it be completely automated and anonymous. And so there's a lot of different things. So if you go to some lending platforms, it's very similar to an enterprise software kind of page. It's like, come talk to us. One of our professionals will reach out to you and assess your needs. That's not what Libre is. Libre is put your Bitcoin here, and 10 minutes later you're going to have the tether. And that's it. So it's a vending machine. So if you want a vending machine, you go to Libre. And by the way, you can see your Bitcoin on chain in an address. It never moves, right? So if you can look at your Bitcoin once you put it in, and your Bitcoin's in that address and never moves. Now, with a lot of other lending things, you give it to the lender, and they do whatever they want with your Bitcoin. You never know. It's commingled. It's blah blah blah. And that was the biggest problem we saw in 2022 with Celsius and some of these other lenders, right? Because they took your Bitcoin and they just spent it. I mean, literally, or they bought some mining equipment with it, or they did something with it, and then when you came to ask for your Bitcoin back, it wasn't there. So same with FTX, right? So I think it's a question of, if you're a pure Bitcoiner and you just want to see your Bitcoin at all times and you want an automated system, that's one thing. If you're a Wall Streeter and you want to have somebody else to sue when things go wrong, well, then you can go and you'll have a different rate and it'll be higher, and you'll have different requirements, and you'll have to sign a contract and do all these things. So there's many different markets, and there's not going to be one winner for all players. So and there's going to be a proliferation of lending thing, but it's a very big market. So I think there's room for a lot of different solutions.
Mm-hmm. Right. So I heard one of the key advantage is the speed, the velocity, the convenience that you're able to get capital, that things are automated. So I want to get Professor Eisfeld, your comments on, so with this model from Bitcoin Libre, So how is it really fundamentally different from traditional banks when they're doing lending? Why can't they achieve this in maybe the same speed or even faster?
Okay, so I guess there's a few things. I want to pick up on the commingling. So I think, one of the things that banks are doing when they do the commingling is they're trying to increase the return on the dollar that you're giving them. So, when you have your money in an index fund, some of those stocks might get lent out, and that, is going to potentially bring down the fees in the index fund or something like that. So there are always, I'm an economist at heart. So I'm a finance professor, but I'm an economist. There's no such thing as a free lunch. But the nice thing about no commingling is that exactly that your property rights on your asset are much stronger when it's not commingled and it's not affected by anyone else's flows in or out of the fund. So that's a really nice feature. As Fred and Ben were talking, I was thinking that actually Bitcoin is not money. And it's kind of silly to compare it to money. And I think that the reason we do that is because of Satoshi's original paper, a peer-to-peer cashless payment system. But we don't use Bitcoin for payments. So when I first started teaching fintech and crypto, we were all talking about what is Bitcoin? Is it a means of payment? Is it a way to money launder? Is it modern art? Is it a store of value? Or is it going to have some killer app? And I agree with you. People don't want to do stuff with their Bitcoin. They want to hold on to it. And it is, I agree with the person who gave the chair that I hold, which is Bitcoin is digital gold. So that means that we used to use gold as money, but it was inconvenient, right? It's kind of heavy. It's a pain in the butt to bring it to Iceland. So what did we do? We started issuing paper against the gold, and we called that money. And that's what we had before we had fiat currency, which is dollars that isn't backed really by money. So now I think what we're moving towards is Bitcoin money, which are these little loans that you can actually use to buy stuff. What does money solve? It doesn't solve a store of value problem. It's not a good store of value because inflation is there. Inflation is eroding away the value of your money. What money solves is the lack of double coincidence of wants. So when I see Kyle and I want a coffee, well, he just drank his coffee. He doesn't have coffee. So he doesn't have any coffee to give me. So if I want, if he wants to pay me, he's going to give me money for giving this lecture. Actually, that'd probably be illegal. And I guess I'm paid by UCLA anyway. So quite happy to be here. But you see what I mean? It's not money. But now if we use our Bitcoin and we borrow money against it, now we have something we can spend. And we've essentially created, we've created an additional currency backed by Bitcoin. And now we have both the store of value and we also have the money that we can use to do the transaction. So I think it's a really interesting solution. It's certainly not new. We've had, gold backed money. We've had other types of asset backed money. But I certainly think given how successful Bitcoin has been as a store of value, that it really makes sense to create money on the back of it. And I'm really excited about their project.
Mm-hmm. Yeah, thank you for sharing that, because from a personal experience, what I've, from the hearsay, people said, Satoshi's original paper is really, as you said, it's meant for a new currency. It's supposed to replace our current currency. But I guess somewhat the unintended consequence, it became a digital gold. It became a store of value. So then for Professor Eisfeld, again, so are you seeing, perhaps our traditional financial institutions, are they, in anyhow, borrowed the strength, the advantage of blockchain? Are you seeing, what are the changes in the traditional finance world? For example, maybe credit underwriting, that I think that is a fundamental for a lot of the lending, at heart, the banks want to know your, credit score better. So are you seeing Bitcoin, blockchain, are they changing any of that stuff?
Okay, so I'm going to be a little cynical here. Sorry. The kind of like dirty secret of fintech lending is that they use snail mail to advertise. So like Quicken sends you snail mail. The dirty secret about crypto is that most of it is not happening on chain. Like most of crypto activity is happening on exchanges. So I'm going to step away from the on-chain part of it, because I think the interesting thing about on-chain is going to be when things are really happening on-chain and they're happening fast, and we have the smart contracts doing things. Bitcoin is not necessarily set up for that, in particular because people don't want to sell it. They don't want to necessarily move it around. But it is totally changing. Crypto and blockchain innovations are totally changing the way we're doing banking, in the sense that we have now Bitcoin ETFs, and now we have potentially the first stable coin that's going to be issued by a consortium of US banks. I actually think stable coins are the killer app of crypto. Your product is called Libre. Those of us who have followed stable coins and crypto may remember Facebook Libre, that actually got shut down by the U.S. government because of the threat to the sovereignty of U.S. currency, and that was Facebook's digital stablecoin that was backed by a basket of currencies, not just the dollar. So I think stablecoin is one way that things are changing. ETFs are another way that things are changing. I think we should use the blockchain more. Kyle knows we talk about cryptography, we talk about blockchain, and we talk about the efficiencies that are available. So far, a lot of what crypto has migrated to looks a lot more like traditional finance than we might want it to. So I'll leave it there.
Thank you so much for sharing. So we definitely saw a lot of tension between crypto and traditional finance, but it seems to sort of easing down. In the recent few years, we've seen a lot of institutional backing, adoption. So I want to ask Fred, with this trend, perhaps even Bitcoin are becoming safer, as you showed that exponential chart. Now it's really in my mind now. So what is a financing gap that you believe crypto lending is really solving, or what traditional financing is overlooking?
Well, first of all, I'm going to agree on the stablecoin thing, because the killer app of the next couple of years, the killer app for usage is going to be stablecoins, right? And already the growth of stablecoins in South America is astounding. It's enormous. The growth of stablecoins in the Middle East is huge. A lot of people would like to use the digital dollar, and I'm excited for it. And I think that this is going to be this is the gateway drug, right? The way I look at it is, this is marijuana, Bitcoin is crack cocaine, and you start with you get a little hit of marijuana, and then ultimately you want to go to the real hard stuff. And when after you understand self-custody, after you understand wallets, you get interested in the thing that has the 44% return. And you graduate to, I want some of that stuff. And I think the fact that we are going to get all these stable coins adopted by the world, and I think if you go to a wall, I'm just as a show of hands, how many people here have a Bitcoin wallet? If you could just raise your hand. Wow, that's a lot more than I thought. How many people here have a Phantom Solana wallet? Okay. Not as many as I would have thought, okay? But there are way many more.
It's not the Solana Summit, sir.
It is not the Solana Summit. But what I'm saying is, there are easily 10 times as many Solana users right now as there are Bitcoin users, right? And I think that number is going to grow. So I think we're going to see maybe 100 times as many Solana users as Bitcoin users in the next couple of years, because Solana is sort of the Instagram, right? So, and stable coins are sort of the Instagram of this space. And I think, it takes and the TikTok, of this space. So I do think that we are going to see this boom of stable coins. So I completely agree with the professor. As far as how that impacts lending, I think you got to have more people who hold it directly, right? So right now, over the last 12 months, we've seen this huge growth in ETF holdings, right? But not a lot of people who buy ETFs actually have any Bitcoin. They don't know how to hold it. They don't, and so they haven't figured out how to borrow against it or anything, because they don't have any Bitcoin. So I think, one thing I try to get everybody to do is, get a Bitcoin wallet and actually use it a little bit. Just send somebody, just understand it. So I think once we get, I'm confident that the growth pattern is going to come from all these stable coins. That's going to be the gateway drug, and it's going to lead to everybody else saying, I'm going to get myself a Bitcoin wallet, and I'm going to get some Bitcoin.
Mm-hmm.
Thanks.
We don't condone drug use, though. Fred doesn't even drink alcohol at all. So,
thanks for sharing. Speaking of, like every single one of us, we can get a Bitcoin address. So, question for Ben. Perhaps you will have probably a lot of clarity and transparency in this. When you look at the user base for Bitcoin Libre, who are these people? So, and then do you see, what are the movements in what are the user segments do you really see that might have more potential, whether it be retail, small business? So what do you see?
So I can answer that in a few ways, but I wanted to start off by just saying that Bitcoin Libre doesn't collect any statistics of its users' locations or demographics at all. So we don't know who most of our users are. We can gather some information if our APIs are being used. And from that, we can see it's mostly US, Europe, Middle East, India, Asia. But the app is built in Spanish and English, so we do have a large contingent in South America using the app. And I think where people basically can't access dollars very easily are places where Libre will do really well. And of course, when people have a lot of Bitcoin, which is mostly in the US and Europe. Now, another thing I wanted to address at this point was that Professor Eisfeld mentioned that a lot of activity on Bitcoin happens on centralized exchanges. And on Libre, everything is completely on-chain and transparent on the Libre chain, running with smart contracts. There's no centralized servers tracking or running any information. It's all completely public, and it's all pseudonymous. But in terms of our users, we don't know a ton about them. And the lending platform has only been live for a few weeks, and it's already we have about $500,000 in collateral in there now, and about $100,000 in loans. So we're about 400% over collateralized right now, which is great for lenders.
Thank you. It's very exciting to hear that momentum coming from that space.
Yeah.
So I guess before we move to Q&A, so I guess for each one of you, so maybe either you can share, if you can change one thing about today's financial system using the on-chain, the blockchain innovation, what would it be? Or you can just share in general, like a quick idea that you want our today's audience to walk away with. So feel free to jump in.
Okay, I'll go first since I have a mic active. I would say the thing I would change is I would remove KYC, which Libre does. And KYC is sort of know your customer. And it's the idea of putting your private data into all of these companies that then they end up leaking all over the place under the idea that somehow them knowing who you are and where the money comes from makes the world a safer place, which I just don't think is true. And actually, I think just causes more problems, more risk for everyday people. So that's my thing.
The one thing I would say is take quantum risk more seriously. I think Ben and I have been talking about it a lot. I don't think it's a problem for 2025. But it could become a problem by 2030, and we need to start really seriously addressing quantum. So I'm all about, we're going to Bitcoin Vegas on Tuesday, and we have meetings with all these quantum people. On Wednesday, I would say that Ben and I just had a really long video conversation with David Chaum, who is the inventor of cryptocurrency, who's a friend of ours. And David, David's like, we have to save Bitcoin, literally. And so all this stuff we take for granted, but the potential for quantum to actually totally disrupt the party is really strong. And it's solvable, but it's not going to be solvable if we just wait until we have a breach, because that's too late. If we wait and, some coins are moved and they start being moved and it turns out that there is a quantum leak, well, then Bitcoin's over, and not just Bitcoin, but a lot of things are over. So we have to be preemptive about this. And we have a couple years to really get our act together and start migrating towards quantum resistant addresses. And we really need to take this stuff seriously. So that's something that I'm definitely spending some time on, because I actually want to hold my Bitcoin for the next couple decades. I really believe in it. I want to be part of that exponential curve, and I don't want it to just go to some quantum hackers.
Professor?
Sure. I'm just going to pick up on something that Ben talked about, which is the KYC. So one of the things I thought 2 years ago when I was teaching fintech was that somehow blockchain technology was going to solve the problem of the two-sided market where we give all our data away for free. And we were all talking about Web3, and we all thought maybe we were going to get compensated for that. So I would like if blockchain would actually deliver on that. I would like that a lot. And that's related to KYC and open banking and all that kind of thing. The other thing is I would like it to help solve speed and efficiency of transactions. We have so many delays in settlement costs, fees involved in transferring, currency or other assets around. And it definitely doesn't have to be like that. So redoing the infrastructure, which is, I think was part of the original hope for crypto and blockchain. And I don't know if we'll get back there. There's a lot of work on it. So I would like to see that come to fruition.
Awesome. Thank you so much for your amazing comments, analysis, and insights. And then we'll open up the floor for Q&A. And then I'll let Kyle to take it over from here. Thank you.
All right. So we'll be taking Q&A. I know, Professor, do we have 5 minutes? A couple minutes.
Yeah. I'll stay for Q&A for
Thank you. So anybody have any questions following the panel? Absolutely.
So Bitcoin-backed lending up to this point and since the days of BlockFi and Celsius have seemed to be solely collateralized by Bitcoin. And I can see the appeal in things like Bitcoin, Libre, and Debify and completely off-chain, like on-chain lending. But aren't there advantages to take from the traditional finance system, like credit score, like specific use lending, where there could be physical assets involved in the collateral package that don't get marked to market? Shouldn't we be incorporating and utilizing those markets to our advantage as borrowers?
Yeah, I would say what is the dream for everybody Bitcoin is they want to get something that's like a 30-year mortgage. That's really what they want. They want something where it's like, the bank gives them the Bitcoin.
Percent rate.
The 10% down, you can borrow one Bitcoin with $10,000, 10% down, and you pay 7% interest. Everybody would love that, right? Now the banks aren't going to do that, and they aren't going to run the risk that Bitcoin disintegrates right now, right? They're not going to run that risk. And so I think the entire financial system is designed around protecting real estate and encouraging leverage on real estate. It is not designed around encouraging interest on Bitcoin. Could it be? Potentially, right? Potentially. I mean, we could see if especially now that the banks are, getting into Bitcoin, getting into crypto assets, I definitely see that, your overall credit score and your entire relationship, you're a customer of Merrill Lynch. Great. Would you like to borrow some against your Bitcoin? Sir, no problem, So I think that's coming, and I think that's very attractive for, the top upper tier, right? I don't think we're going to get there. I don't think we're going to get a Bitcoin mortgage type product that's like that for a while, just because I think the lenders don't want it. So I think from our perspective, we've looked at this thing as a two-sided marketplace, right? And it's like, what will lenders be comfortable with lending without any knowledge of the person, right? What are they going to lend purely on collateral? And, the rates are really high, right? So if you look at something like Unchained Capital, right, they're offering loans at 14%, 17 now, right? So 17%, and there's like a 1 or 2% origination fee, right? So
There's a minimum volume.
yeah, so there's the terms are really onerous right now because the lenders are not willing to do it, right? But I think that will eventually change, and I think better tools where the lenders can get their money out. They have defined maturities, and they are not just dealing with the contracts with the people like on-chain capital. And part of our goal is not just the borrowers, right? Part of our goal is to provide a framework where lenders can say, okay, would you take 10, how does earning 10% on your money sound? Okay, that sounds pretty good. What's my, how long how about 10%? I'm going to give you 10%, but you have to leave it in. Maximum, you can get your money out in 90 days. Okay, 90 days, 10%, that sounds pretty good. And it's back 2x by Bitcoin. That's pretty good for a lender, So I think that's the challenge. It's not just from the Bitcoiner's perspective, but from the lending perspective. Thanks.
Yeah, I think there's something really unique and cool about just having a collateral-based marketplace like Libre is for lending, where it doesn't matter what your social security number is or was or what your credit score happens to be or not. Kyle, if he wants to raise money for his business, like good luck getting an uncollateralized small business loan. Or if you don't have any assets that you can borrow against, what are you going to do? Well, you can buy Bitcoin and you can borrow against it. And that offers up so much freedom for people. It creates so much opportunity. And that's kind of why we created Libre. And there's really no minimum in Libre. So a lot of these other lending platforms have these huge minimums because they're looking to lock in big institutional investors. And Libre is more for the everyday person. It's a long tail of loans. People want to take out $1,000, $10,000, $50,000, $100,000.
Do you circumvent the regulation at retail doing it on chain? Like you don't have to satisfy state by state lending?
I think it's a gray area.
Yeah.
I think if Libre gets big enough, the government would probably come after us and say, hey, if you're offering this in the US, you have to.
Well, I would say, this stuff has been going on before Libre on Ethereum, right? So if you look at Aave and Compound, right? Aave and Compound are hugely successful anonymous lending platforms where you can borrow against your ETH, no problem, right? The problem is with Bitcoin is they involve taking your Bitcoin, wrapping it into wrapped Bitcoin, and then borrowing against. Now, the problem there is I can tell you that I know a lot of Bitcoiners, and I do not know a single Bitcoiner who will be like, so wait a second, I'm going to take my Bitcoin, I'm going to get wrapped Bitcoin for it, I'm going to pay a 2% spread for a 1% spread for that, and then I'm going to borrow against that, and then I'm going to, when I want to redeem it, I'm going to pay another 1% spread. No, thank you. And I have no guarantee that the wrapping is not going to, so there's a lot of problems there. So I think the one thing that, our goal here was to make this Bitcoin native, right? So that your Bitcoin stays in Bitcoin.
Yeah, if you allow me, on the previous comment, we don't need credit score there because Bitcoin is trustless. We need credits in a trust-based systems, right? So with the trust on-chain, is everybody sees the reputation. My question to you, what's your perspective on the strategic reserve of countries? Countries are looking to having Bitcoin. What's your take on that?
I mean, I don't have any necessarily unique thing.
Look, I think, just like what do countries invest in today? Everyone, including countries, has only a few choices of what to buy with their money. And those choices are kind of like you can buy treasuries, you can buy bonds, you can buy real estate, you can buy stocks, or you can buy Bitcoin. Really, that's a very legitimate option. And it's worked out really well for El Salvador. For years, it didn't. And everyone was like, I have this one friend who's like, hey, look, El Salvador, they're suffering again. You see, I told you it wasn't going to work all the time.
Haters.
Now, where are they? They kind of shut up about it because it kind of has worked out for them so far. And El Salvador is now also, one of the safest countries in the world, apparently. So these strategic reserves, basically, I think that it's just like gold, right? Something that they can buy and hold on to that can help them back their economy. I think there's a very strong case for it. And I think that the more people that keep doing it, the more people that are going to do it.
I think as the dollar, a lot of this is a macro discussion on the role of the dollar in the global economy, right? And so for a very long time, we had, the role was we're going to buy all your goods. You're going to have this exchange rate that's very low, right? You're going to be, and we're just going to buy so you're going to be shipping all this stuff to us, and then you're going to get all these dollars. And what are you going to do with those dollars? You're going to turn around and you're going to buy our treasuries, right? And so, or you're going to buy NASDAQ stocks. So it started first you're going to buy treasuries, then you're going to buy NASDAQ stocks. And now the Chinese are sort of saying, well, you know what? We're done buying treasuries. We'd like to buy gold instead, right? So, I think there's the overall macro environment is changing. And I think for these countries to hold dollars they don't really want it. And I also think that in many respects, the U.S. doesn't want them to do that anymore. So the U.S. is really starting to push in the direction of capital controls. Yesterday, there was in the stablecoin bill, there was this remittance tax. Okay. So you want to send money back to Mexico, you now pay us 3%, So I think we're not so far away from just overall capital controls here. And I think that this is going to push a lot of people to buy Bitcoin eventually, right? And so I think it's going to be a tremendous move because, there are about, it's about the total amount of Bitcoin that's owned by the sovereigns is on the order of, I think it's on the order of 50 billion, I think. And then the total amount of gold owned is, 100 times that, right? So it's 5 trillion, right? So, I think we have an enormous way to go, right? We're really, we could 10x or 100x or 50x without even Bitcoin taking over gold, right? Just from people saying, what a second, we got to buy some of this Bitcoin. So I think it's, this is part of this exponential growth story. We need bigger and bigger and bigger numbers to kind of fuel the growth story. And we're going to need sovereigns and companies to start buying Bitcoin, which they are going to do.
Thank you, Ben and Fred, for those responses. I know the two of you will be at post-event networking, correct? Yeah. If there's anybody that has a question, we'll take one more for Professor Eisfeld. Is there anybody that wanted to ask additional finance? I saw your hand first. Yeah.
I have a question. First, thank you so much for your time. It's been really educational. Me and my family are from Ecuador, and the whole Bitcoin environment is really not regulated. So I would want any advice on how would you start investing large amounts in a country. I'm from Ecuador, that it still doesn't have like a clear path, because I've heard that once you start, it's not legal to do transactions in Bitcoin in Ecuador yet. So how do you start saving wealth in Bitcoin in these countries?
That still may be a question for Ben. That's okay.
I don't know off the top of my head, but I would say that there's always a way. And so I can look into it some more and maybe talk to some people. I'm sure I can find some Bitcoiners in Ecuador really quickly on X and ask them about it. And I'll get back to you. Just come see me later. We'll figure it out.
I was going to say, give them 2 hours. I'll get back.
15 minutes.
Yeah. All right. Well, everybody, please thank our first panel speakers.
Great to meet you. Yes. Enjoy the rest of the day.
So today, just a quick story. This event was originally scheduled for the Friday of the week of the fires in Los Angeles and had to be rescheduled. So today, for every speaker, we are donating 21,000 sats to wildfire relief and the Bitcoin Students Network to support that. But just to stay on time, we originally had a 10-minute break plan. We're going to give 5 minutes. I'm going to put up a slide with a QR code that allows you to kind of jot down maybe a feeling or a memory or a note, something you learned from this panel, and we'll kind of recap that at the end. But we'll take 5 minutes, say hi to friends or do whatever you like.
I was just joking. I mean, that was funny. Sure. Sorry about that. I'll see you guys in the networking event. I was going to talk to my fellow speaker to figure out
Yeah, nice to meet you. We'll come in.
Oh, it's Stella.
Hi, pleasure.
It's a nice big Brando on the guy screen. Panel. I mean, time for this thing, so it's like, all right. Expectation. Acquaintances with them.
A centralized data is the sort of but also regard.
There's all these young people.
There's a certain element that, like,
Appreciate you getting on.
it's those first principles that everything should be public.
That was where you're from.
That's one of the way people use it. I got
Merkel check.
I've got like this.
Anyone can go and see not just that your Bitcoin's there. The address that has a loan has its Bitcoin in there. It's all completely there on chain for you to see.
I'm not sure.
Which address? You go look at every address and see how much Bitcoin's in each one. You can see how much.
Isolate its own. Well, it would get liquidated if the person. Well, no, there's no pool. Late, huh? Yeah, so we put that up.
Hi, lovely meeting you.
Right.
Yeah.
When did you buy it?
Welcome.
Thank you.
Yeah.
I do. I support Manny. Anything Manny does, I'm here.
You on Luma supporting Manny? There was somebody that wrote.
Was I?
In Vegas, anyway.
Literally was like, almost.
It's getting a little tired, so I brought it.
Oh my God. I am. I have this sense of me. I don't know what that is.
Tell me what it is. Yeah, I'm like, I don't think she's ever been put on a list.
Well, great. I'm glad. All right, you got the orange sticker. I was like, use them. We're like,
Yeah.
it's pretty fun.
Yeah, let's get started soon.
Yeah,
So,
as soon as.
yeah, let's keep ours. If you need to cut it a little bit, that's fine. You can just get
So we'll start it. Once William walks back in, it's very.
Yeah, like on 2 days. Those whole panels.
That'd be fine. Yeah, I need it.
You can follow us on that.
Yeah, it's like.
Yeah, you can. Like, just go. And like, I feel you, and you need to get back on track. Because then you have the reception too. I need to mind it. This requires trusting.
Long time on new boss. And I didn't buy any.
CEU.
CLE.
If I were the FBI, you know what else I would own is Yeah, no, I'm super excited. Yeah, super out. Yeah, for sure. What is that?
Great brains.
Right, so you have to go from the Loving Conference after the 12th.
Yeah, that's okay. Yeah. So I have UCLA. No, I have UCLA.
No, I think it's a good thing to go to.
Yeah,
Are you still part of Tesla? Yeah,
I'd be there.
yeah. You're the diversity king.
Yeah, pretty much. I was like literally, she was like,
So let me know if you can hear me.
yeah, different. I'm like,
Hello, can you?
someone else. It's like,
I look forward to catching up.
That's like hire people that are
Triple?
it makes sense.
I got sick of the names.
Got in.
I like the
You're gonna it's great.
6:30.
We're gonna get the second panel started. So, yeah, talk about it. I brought the cards.
I know, I saw my kids.
Very good. No, well, I even brought the fun one. I brought more colors. I made sure I was like ahead. Yeah, say
No, it's not. So, like, I picked up the tab last night.
Yeah.
Like, that's what I never did. I was like,
I was gonna say.
that was not really great.
I know, me.
Like three of us.
Yeah.
I'm like, huh? I am sorry. I guess I told Raji she said like hi.
I feel like you make it worse. I feel like her thing is
Her accent.
Oh, yeah. How do I say something?
Yeah, but I'm like, just roll around. Yeah. It's like,
An hour ago, I was like, I'll go to the same.
I'm like 10 years. Like, you're fine. So needed this one.
You're the first.
Yeah.
Everyone knows that page or whatever.
I mean, like,
I always love
yeah, you said it should go up. Yeah, it could be worse. It's how like Siri is.
How do you know?
Okay. Hotel.
That's my investment philosophy.
I know what
your value. If you're in value investing,
I want to go to like, I want to get
that's down. If you're in what's hold up, like making money.
Companies that are like
Cash flows.
Well, why you cannot stop eating?
I try to go to work. You have like access to the Wi-Fi?
Why visa?
Similar. I guess. More like younger. No, I mean like the vibe is like what you.
Yeah, I guess we don't have a full.
No, it's
Yeah.
How's it going, man?
Good to see you. All right. Let me put this on silent. Turn it off.
All right. Well, welcome back from break. Hopefully you made a new friend. Feel a little rested, but so we're going to be starting our second panel. I would love to introduce the speakers, but I'll just be introducing my friend Vaibhav. Vaibhav's a first-year MBA full-time. He was my director within the Entrepreneur Association with a background in tech, and we're excited. He'll be taking over the Unchained series, which this event is a part of for next year. He's excited about entrepreneurship and cryptocurrency and ready to get this panel started. So thank you.
Thank you so much, Kyle, for the introduction. Ladies and gentlemen, we have two amazing speakers with us. Let me introduce them. Please welcome Manny Khan. He's a UCLA Anderson MBA alum, class of 21, and director of cybersecurity at BitGo, one of the largest digital asset custodians. Manny leads BitGo's security strategy across infrastructure, wallets, and compliance. His expertise spans hardware security modules, multi-sig wallet hardening, and threat modeling for top-tier institutional clients. Now, BitGo's reputation as a trusted custodian, including their cold storage solution used by FTX during its 2022 breach, highlights the stakes. With over 15 years in cybersecurity leadership, Manny keeps the industry one step ahead of every emerging threat. Let's give him a round of applause.
Thank you so much. Pleasure to be here. Honor to be here. Thank you to Kyle as well for organizing. Wow, you said it really, really well. Thank you. That was a great introduction. Happy Friday. Happy Memorial Day weekend. And just so you know, I'm not a paid actor or model. I am actually a professional. Please feel free to add me on LinkedIn if you'd like. If you don't know BitGo, real quick about BitGo, we are the second largest crypto custodian in the world. With over 100 billion assets under custody. We do staking, lending, borrowing. We started off as a wallet company, but we're much more than that. So if you don't have a BitGo account today, I suggest you get one. Turning it over.
Yeah, so next up is William. William is the founder and president of Sazmining. Now, William built a Bitcoin mining as a service provider powered entirely by hydroelectricity in the US and Paraguay, helping users mine BTC via 100% renewable energy so that neither individuals nor institutions need to run hardware anymore themselves. Now, his transparent, carbon-neutral model slashes entry barriers, aligns mining with sustainability goals, and raises the bar for eco-friendly practices across the crypto sector. Please welcome him.
Thank you guys so much for being here on this amazing Friday. And once again, Kyle, I know that you're probably getting a lot of props throughout the day, but Kyle's the man. I was with him actually working in one of these buildings over here as he was putting this all together. So a lot of amazing work coming into this and super grateful for all you guys coming out.
So let's start with understanding about their background, their motivations, where they come from. Manny, could you briefly compare your Web2 security experience with your current Web3 role and outline the fundamental principles of Bitcoin security that everyone here should know?
Absolutely. So at BitGo, we believe digital assets drive the global economy. Our mission is to deliver trust in digital assets. Part of what that means is we obviously rely on Web2 infrastructure. Web2 is table stakes, right? You need to get the foundations right. Web3 is the actual castle. The castle is where a slip of the key can mean losing your funds within seconds. So the fundamental principle behind crypto security is making sure you have a secure wallet. Where do you find a secure wallet? We at BitGo pioneered the multi-sig wallet, which uses an M of N approach, meaning 2 out of 3 keys. We use hot wallets, cold wallets, custody wallets. I could sit here and explain the differences, but you all have access to ChatGPT and AI, so I'm sure you can look it up. But again, it's really important that you keep your keys safe, and that is foundational. So I'll turn it back over to you.
Yeah, thank you so much for telling us about that. William, can you take us through your personal journey into Bitcoin and explain how you're engaging with mining and the broader ecosystem?
Yeah, absolutely. And also, coming into this event today, I did not realize that Fred and Ben were going to give away billions of dollars. So unfortunately, I don't have billions of dollars on me to give to you guys for this event. But yeah, my own personal journey down the Bitcoin rabbit hole, so to say, I feel like it's really interesting to hear people's stories and how they got involved. And I first heard about Ethereum actually before Bitcoin from some of my fraternity brothers who were buying Ethereum when it was under $10. I ended up investing shortly after and starting a number of years later the company Sazmining, which makes it easy for anyone to start mining Bitcoin. So I think from the last talk, we know that all you guys are actually pretty deep in the Bitcoin ecosystem. But by a show of hands, how many of you guys are currently own Bitcoin and got involved at 2018 or earlier? Okay, that's sweet. Yeah, into Bitcoin.
Who's into Bitcoin?
Yeah, like who bought and owned Bitcoin like starting in 2018 or earlier? Well, I was just going to say that at that time, you were looking at a completely different mining industry. Today, you see a lot of these big Bitcoin miners, and they're extremely sophisticated when it comes to energy and how to operate these facilities. But back at that time, a lot of the big Bitcoin miners didn't really know that much about the energy sector. They weren't vertically integrating in a big way. And yeah, that's really where I saw a big opportunity for us to try and bring Bitcoin mining to the masses, where if you wanted to buy a single mining rig, you could do that without needing to, have millions of dollars to get started with Bitcoin mining.
That's awesome. I feel like we've come a long way from where we started. Thank you both for touching upon that. Now let's get into what's happening in today's world. Recently, Coinbase reported a security breach. So Manny, can you tell us what happened? Why does it matter for institutional custody? And what lessons should we all take away?
Yeah, absolutely. So one, Coinbase, I think personally did a fantastic job responding to their incident. This wasn't a 0-day vulnerability in their software. This was a zero judgment day for them. What that means is that the person that they trusted was someone that was that took advantage of that trust, right? At BitGo, we do things in a way that we watch our endpoints similar to and what's happening on them and the people using them, right? We're always monitoring, defending, and making sure that the right privileges, the right access are based on roles and permissions. I think we had in that situation somebody that's, if you think about it like a castle, someone that's supposed to be guarding the castle, that let down the drawbridge, let someone dress up in gave them their badge, gave them their access, and said, "Come on in for some money." Now, this type of incident is fundamentally telling us that we all need to be hyper vigilant, that humans are the weak point in these systems, and that we do need to think about them as well as our technical controls and our operational controls. Again, BitGo has been doing this since 2013. We've been looking at threats from inside and externally since the very start. BitGo takes a no compromise to security approach. And that's what I recommend all of you do when you're storing your crypto anywhere with any institution.
Yeah, that's valuable advice. I mean, that's truly revealing that they just paid someone off and that lead to that breach. I'm at a loss of words right now. William, next up for you. Sazmining's mission emphasizes uniting Bitcoin with environmental sustainability. How does your service achieve that balance in actual practice?
Yeah, I think one of the big things about Bitcoin mining as a whole, and that's been painted in the media a lot, is Bitcoin mining's energy use. And so there was this big hit piece a number of years back where everyone was attacking the Bitcoin mining industry for being really bad for the environment. And I remember early on in the days starting Sazmining, one of the big keys to unlocking the business model was to connect with a lot of these big leaders in energy and big leaders in mining. And so I ended up starting a podcast because no one would respond to my cold DMs. Started a podcast where our focus was trying to interview and speak with these public company CEOs in the energy sector or in Bitcoin mining. And in speaking with all of them, I realized that the energy component of Bitcoin mining is arguably one of the most powerful pieces of what makes Bitcoin mining, what makes Bitcoin special. A lot of people talk about the financial benefits, but as a technology for the energy sector, it's unbelievable what it unlocks. And so, what do I mean by this? Let's say you're a grid operator, or you're trying to supply electricity to a certain area. It's kind of a miracle that whenever you turn on the lights, everything just works. You're not worried about the lights not turning on. And in order to plan for this as an energy company, you're planning for when the demand's the highest in terms of the amount of energy needed, as well as when there's not as much of a need. And one of the big challenges with renewable energies is that they're intermittent energy sources. So the sun's not shining 24 hours a day. the wind's not always blowing, and you're taking in different amounts of energy at each of those times. And so why does this matter for the energy grid and these energy companies? Well, if you're trying to plan around when you've got high energy demand, or you're trying to plan around when there's not much energy demand, then it really helps to have a buyer of your energy that you can turn off on a dime. It's like you can turn off a Bitcoin miner at any hour of the day, and it doesn't matter because they're just going to be mining the rest of the time. But if you try and turn off a hospital or some other business where it's very important to have energy at certain times where it's like you can't really plan that out, then obviously you can't shut that off. So in terms of, to your question, what this technology means for the energy sector, I think it's one of the most powerful and not quite untapped, because we see a lot of Bitcoin miners and energy companies implementing Bitcoin mining into grid stability. But it's a very powerful technology that I think you're going to see continue to grow over time.
Yeah, that's exciting to hear. Well, let's go into the future of this space, right? We talked about how you guys come up. We talked about the current scenario. Going into the future space, Manny, I have a question for you. How is BitGo preparing for future threats from emerging technologies like quantum computing?
That's a great question. So let's take a step back, right? There's going to always be emerging threats. It's in the name, right? So if you look at quantum computing, you look at deep fakes, you look at AI, how do we deal with emerging threats? One is, again, by taking a no compromise approach to security and talking to our customers. What's the real danger? What's the real threat, right? And working closely with our product managers, our engineering managers to do security threat modeling. So we're looking at models where, hey, how can we spoof this user? How can they tamper with our product? How can they repudiate what we can, if they actually do a transaction and claim that they didn't? Information disclosure. So we're looking at the entire model to say that, hey, what controls do we have in place? And this is what our customers care about. This is what individuals like yourselves should care about. What controls, what technical controls, what operational controls do you have in place? At BitGo, we have video ID verification. We have policy engines. We have all these things that allow you to separate segregation of duties, where one person can be the approver, one person can give you be the spender. They can, and other policies in place where you can customize it based on your entity and your needs, right? We can set velocity limits, how much can go out at a certain time per day, per period, things of that nature. So regardless if it's quantum computing, AI, or deep fakes, BitGo has been on the forefront of putting security first, always, and foundational through our products. And that's what we're going to continue to do. And that's what I encourage every Web3, blockchain, crypto founder to continue to do.
Makes sense. But when you say you're putting limits on capacity, does that also mean that users have to face some sort of limitations on functionality?
That's a great question. So as a financial institution, right, you could be looking at like, hey, I do about $5 million worth of transactions a day. Mm-hmm. So you could set your policy for 5 million. Now, if that policy is hit, right, now you get notified, you got to go through extra approvals, extra steps, and things of that nature. Or you can change that limit to be like, actually, we do 10 million a day differently. So you have that customizability. So balancing security needs versus and minimizing user friction is absolutely key, because you want a product that folks can use, that they can balance. And again, these numbers are just numbers made to exemplify it. Some depending on the organization's needs, we service financial institutions, hedge funds, entire nation states keep crypto. As you've seen through the news, there's a Bitcoin reserve now with the US. Other countries have done something similar. States are now doing things similarly. And they're coming to BitGo and asking, hey, how do we do this securely? So keep that in mind. And everyone has different needs. You need to have a unified approach, but you also need customizability for these unique user experiences.
Yeah, that's awesome. Willem, where do you see the greatest opportunities for innovation in mining infrastructure, such as waste heat recovery, standard gas utilization, grid services, or is there any other area?
Well, we touched on the grid stability aspect of Bitcoin mining, which I think is a big one. You mentioned another really big one, which is leveraging wasted energy assets or flare gas. And so one of the biggest polluters out there is methane. Everyone always talks about carbon dioxide, but methane is, I think, 82 times worse for the environment in terms of its actual effect. And so in terms of how do we address this methane problem, Bitcoin mining is one of the only potential solutions out there. And how does Bitcoin mining address the methane problem? Well, you can go on site to where there's all this methane going up into the environment, and you can put some type of mining setup there to capture that methane and use it to generate electricity. And then that electricity can be used to mine Bitcoin. And so all of a sudden, you're not just looking at a renewable technology or renewable energy source, you're looking at a carbon negative energy source that can be used to power your Bitcoin mines. And so one of the guys who was on my podcast is Chase from Crusoe Energy, and they're one of the leaders in this flare gas mining. All of these different things have their own challenges. So methane mining does have its own challenges, but the economics are very, very compelling. And I think that in terms of innovation, that's one of the most exciting innovations for carbon negative mining right now.
So you're sort of closing the loop on using the energy and then reusing it for Bitcoin mining, if I may say so.
Yeah, absolutely. So instead of it going up into the environment, they can be captured and turned into electricity.
That's awesome. Next up, Manny, for those that are new to BitGo, what core practices and technologies have kept your platform secure and breach-free since 2013?
Well, I think we touched on some of them, right? So we have a policy engine that allows you to set different limits, different approvers, different spenders, which is really powerful technology. And again, I think there's other video verification is another one, where you actually have to get on the Google Meets with a live operator who validates a lot of the information of who you are, the transaction details. What we saw in something called the Bybit Safe hack was a $1.5 billion hack. This happened back in February. And it was through blind signing, right? At BitGo, we don't believe in blind signing. It's not even a thing that we ever want to do or you should do, because you want to know the details of where your money is going. And we saw that a malicious hacker was able to manipulate that contract. Now, we don't allow that at BitGo. And without getting too specific as to our controls and others precautions that we have in place, what I would suggest is that you guys all get a BitGo account. And a shameless plug, but I highly recommend it. And then create your own wallets on there, and you'll be able to see the policy engine, the video verification, and how this is different than other wallets you may have used. We don't do browser-based wallets. Again, like there's different types of wallets for everyone. We primarily build our wallets at institutional grade level, which means that they're more for financial services. We're trusting billions and billions of dollars at stake. We're not meant for influencers. Let me put it that way.
That makes sense. William, I know you touched upon it a little bit, but let's keep the record straight for everyone. What are the most common misconceptions about Bitcoin mining's energy consumption and environmental impact?
I would say the first one that we touched on is that it's bad for the energy sector. The one point that we haven't yet touched on is the stranded power assets. So let's say that you are a renewable energy developer and you're trying to bring a solar project online. There are certain times where your financing isn't going to come together and maybe you can't get that project fully off the ground. It's become quite common in the industry where you'll have these miners that will try and find these wasted energy assets, things that might have been financed and never got across the finish line. Because when you introduce Bitcoin mining to that project, now you have this renewable energy capacity. You've got this potential solar farm or energy source that wouldn't have been online. And now all of a sudden it's online because the Bitcoin mining project brought in the capital and got the solar farm finished. Also, you're incentivized to get that energy to the grid. So any single person who's connected to that energy on the grid can use that energy because you just brought that capacity online. So this is something that Bitcoin mining has been doing a lot of. If we look at a facility that you mentioned, our facility in Paraguay, this is another aspect where they have gigawatts of excess power by the Itapu Dam out in Paraguay. So miners are incentivized to go and find those cheapest forms of energy and help bring them online and connect them to the grid because it makes sense economically. And it also is going to help out any single person who's connected to that grid.
Awesome. So a last question for both of you. In just 30 seconds, what final thought or call to action would you leave for our audience to inspire them to explore Bitcoin further?
You want to go first? I feel like I went first the first time.
Yeah, I'll go first. Well, I think the big message is to buy Bitcoin. I think that, or get exposure through mining. I think Fred and Ben laid out an amazing case for Bitcoin. If I'm just going one step on top of everything that they mentioned, and where the questions were going with, what is going to happen with these sovereigns buying Bitcoin? Well, I think that if you look throughout human history, there's one thing that's never going to change, and that is that governments are going to continue printing money. And this morning, I was talking with one of my friends who, in his country, in Bolivia, their currency was pegged to the dollar 7-1 just 3 months ago. He was early on in Bitcoin and understood, hey, telling all of his friends and family, get your money out of this currency. This currency is going to fail. It's going to continue to collapse against the dollar. And all of them said that he was crazy. Like, that can't happen. This wouldn't happen in our country. Since then, in just these past handful of months, you've seen it go from 7-1 to 20-1. And now all of a sudden, all of these people in his country are paying attention. All of his friends and family are asking how they can get out, and they're learning how to get out of the local currency. And so why is this good for Bitcoin? Well, all of this value that you have in these currencies that are collapsing are going to try and find a place to protect themselves somewhere, whether it's in Bitcoin, whether it's in a stable coin, whether it's in any asset that's better than this failing currency. And so if you just look at the trend lines, governments aren't going to stop printing money. And every single one of these countries that goes through these hyperinflation events, by necessity, the citizens, to protect your wealth and to protect yourself and your family, take your money out of that collapsing currency, and a lot of it goes into Bitcoin. I am in complete agreement with the predictions made earlier in the last talk, and I think that buying Bitcoin now, it sounds crazy when we come up here and we say, hey, this is going to be worth $1 million a coin and then $5 million a coin, so on and so on. But I think that just following the data gets you there. So you guys are all super, super early, and you have a great opportunity.
So that was more than 30 seconds. Thank you for that, though. I am legally and compliance-wise cannot recommend to go buy anything. But what I will say is that I am a believer in digital assets, right? That's what we do at BitGo. We believe that digital assets do drive the global economy. Our mission is, again, to deliver trust in those assets. My advice in the next 15 seconds I have left is that I'm looking at the faces of the future founders, builders, and community leaders of Web3, blockchain, and crypto. You don't need any of us to tell you what's next. You need to find it for yourself. So what I tell you today, don't be afraid to jump in, figure it out, and get your hands dirty. Get a wallet, open it up, see what it's like, and try your best. Thank you. Thank you for being here.
Awesome. We'll open the floor for some audience questions.
So, hi William. Thank you for being here. What are some of the hardest lessons that you have learned while running mining operations in US and Paraguay?
That's a great question. A lot of them. One of the big challenges that I hadn't anticipated of how important it is. I mean, with mining, it seems pretty black and white. Hey, if you can get very cheap energy and you can get the equipment at a good price, then it makes sense. One of the other big vectors that we'll look at now is what does that geopolitical environment look like, and how is that decision-making process in that location? Because one of the things that you've seen, God forbid it happens to a place where you build a mining facility, is the energy rate suddenly is changed on you. There's some type of change in terms of who's dealing with that area, and they kick you out, and then all of a sudden you're eating the losses on that. Or if you've got customers in that facility, you've got to find a way to make all of them whole. So I would say the biggest thing is just the vetting in terms of who you're actually dealing with outside of just the pure economics, and then asking the follow-on question, how are incentives aligned? So with the Paraguay facility, no matter who's in control at that time, there's always going to be a huge incentive for you to want to support the facility, because there's gigawatts of excess power there. And instead of you paying Brazil to take the excess power or not make any money off of it, you can mine Bitcoin and make money off of that area. So that's a big lesson that I've learned the hard way, and I've seen other people learn the hard way in the past, but one of the biggest outside of the price.
I have a question for the audience.
Go for
Is that
it.
right?
Yeah, go for it. Grill them.
So I'm not going to grill them, but you take it down a notch. But I will ask you this, and listen, if you don't want to answer it, that's totally fine. Has anyone been scammed through crypto? All right. Yeah. Listen, it happens. I'm in cybersecurity, trust me. And I see it happen, right? Where we get customers that reach out to us like, hey, you sent us an email and you told me that, I need to verify my information. I guess what I want to leave this audience with, right, is that social engineering is very real. And the number one thing that we've seen since we've been around, 2013, is social engineering, phishing, the tricking of the user, right? Be vigilant, right? If you get an email, if you get a text, if you get a voicemail claiming to be from your wallet provider or whoever, you double check. Be like, wait, this doesn't seem right. Before you start clicking on things, entering your information, just pause and think, and just be skeptical. So that's what I wanted to leave you with. I saw some hands go up. Thank you for sharing your trauma, and I appreciate you for doing so. Nobody else? That's really good. That's we got. Oh, you got. All right. You're like, fine. I'll come forward. All right. So, do you want to? Does anyone want to share their story real quick? You want to share?
They weren't successful, but maybe a couple of weeks ago with the Coinbase leak, I had them call me, and they were pretty legit, American sounding, probably American guys, but I was suspicious, of course, and was just kind of pulling their leg a little bit and wasting their time. But it's happened a few times, and I'm always cautious with that stuff.
Good. And where does that caution come from? How did you know to be cautious?
I don't know. Just I know how easy it is to just get hacked. I hear about it, throughout my circle and my friends.
Right.
It's happened to people I know.
Right. And you've seen credit card fraud and all these things, and you've been told like, hey, don't give out your account number and things like that. The same principles apply, right? Don't share information unless you absolutely need to. Make sure you're sharing it through the right way. Make sure you're looking at the links, the URL, making sure that what you're clicking is really where you're going, things of that nature. So, and then reach out. Hey, we have a hand back there.
I'll share mine because you nailed it. I went to a fake velodrome. I was in such a rush to jump into velodrome. I didn't have it bookmarked, and you got to look, man. Make the website look exactly the same. I've been there a million times, and I was just about to sign the transaction, but the gas was super expensive.
That's a sign. Yeah, that's a sign. That's an indicator. We have two more hands up. Let's go one more back, and then we'll move up to the front. All right, go ahead.
Yeah, I was going to say, what are like some emerging cybersecurity threats that you guys are noticing now, and how is a company like yours, BitGo, prepared to address them?
I think there was a question on there in the panel section earlier, so we can rewind the tape for you. But one of the things we're hearing about is deepfakes, right? I'll just talk about that very quickly. Deepfakes are a concern. We're seeing that come up. No successful deepfake attempts have ever happened at BitGo. And why is that, right? Because we use a multi-layered defense in depth and breadth approach, meaning we're not just relying on technical controls, username, passwords, MFA. We actually have human beings that do trust operators that look at transactions before they're signed by us, right? We're never the first signer. The customer is. The customer signs first, we countersign, and then that transaction is before that transaction is even signed, we review it to make sure that all the things are in place, the amount, the approver, we identify that person, and then it's broadcasted to the chain. So that's what we're seeing. Be on the lookout for deep fakes, and report it if you see it. And we had one up here.
Yeah, I have a question, but first I want to make a comment about the scams.
Mm-hmm.
I personally think the best safeguard against a scam is that you do not respond or share any information to whoever calls from any government, financial, IRS, whatever agency. You say, okay, I'll look into it, and then you hang up. You have the contact number for your bank, IRS, all these different organizations. You call them and say, somebody called me and said, you want to talk to me and there's an issue. They will look into it. If it is legit, then you will share. If not, you're safe. They cannot. The same goes with the links that you receive in emails. I would never click on a link. Actually, I've changed all my clients to convert the emails to text only. That way, I'm always safe. So that's the best safeguard against that. But since I'm glad you're in security on the panel. And are you in B2B only or B2C as well?
So great question. So we are B2B and B2C. So you can, as an individual, have your own wallet with us.
Okay, so if that's the case, I want to know if you also believe that you should not have any information or know your customer, as there is a requirement. Or you follow through and you really know who is your customer, what they're doing with the money, because obviously we know if there is a financial institution that they're not know their customers or they keep track of it, the first group of people that come are the people that are using it for nefarious application. Meaning, money laundering is the simplest. There are more things like all sorts of, drug dealing, whatever, and basically doing financial transaction. Then your organization will be responsible for that, right? If something goes wrong, the government agency could come after you. So I'm wondering how you feel about the regulations in this industry. Okay. I think the industry should get ahead with academics and nonprofit organizations, professional organizations, to come up with guidelines and safeguards and regulations. Otherwise, disasters happen and the politicians get involved and you will have a bigger problem. So I'm wondering
what my opinion is?
Yes, on that.
Okay. Well, thank you for sharing yours. That was great. I think that more people need to vocalize their thoughts and be curious about these areas. KYB, know your business, KYC, know your customer, AML is all very important. I don't want to see our wallets or our products used for nefarious purposes, right? That's why we have compliance regulations and applicable laws today, just like banks and other financial institutions do. We are a qualified custodian. We have to follow those same laws. I don't want our wallets being used to fund terrorism or want them to be fund using arms deals or drug deals or anything like that, right? Now, we have compliance checks in place. We are for financial institutions. Individuals like yourself that want to have a wallet can use your wallet, and we have guidelines in terms of use, obviously to only use them for legal purposes as terms of contract, right? For using our platform. Other than that, right? I'm not seeing it's not like you have to write, I'm getting a receipt for every transaction you do, right? So the ethics and morals are very tightly ingrained with security. We do ban and stop users where we find that they may be doing something that isn't in line with either AML compliance. We do immediately stop them and take immediate action. And we don't wait. We do what we need to do to stop those actions when we know them and how as quickly as we can, because we do not support anything like that. So again, finding a crypto custodian that is in line with those ethics, values, has those controls in place is just as important as finding an institution with having institutional grade wallets. Great question. Thank you.
We'll take one last question. I knew you had a hand up.
Yeah, we had some fraud on the B2B side. So we work with a custody provider, and essentially we have a platform where people can buy and sell crypto. And so we had all these people from Armenia taking the rewards that we were giving them in crypto, and they were sending it to one wallet. We were working with Fireblocks, and then they took all the money out of that one wallet. And I was wondering what measures, does BitGo put in place to stop that? Partially, that was a fault on our side, but I'm just wondering what you guys do in that regard.
So let's have an offline conversation about that. And again, I think that's a fair question. I think it deserves a bit more context, right? I think that crypto custodians definitely have their own controls, and I'd like to understand more about your situation before being able to answer that. Right?
All right. Thank you so much, everyone. Thank you so much.
Thank you so much, everyone. Great one. Yeah.
You missed our photo last.
Oh yeah.
Oh wait. Let me make sure.
You want a photo?
Yeah. Okay, we'll grab a photo really quick.
All right. Great.
Yeah.
Yeah, bro. At least it happened.
Fireblocks.
Thank you.
Thanks,
Yeah.
Cheers.
We'll just take a really small 2 to 3 minute break, and we'll get started.
He gave me a special prize.
All right.
All custom cards.
Yeah.
Are these Bitcoin trading?
Hey, let's talk more about your future business too, right?
All right. This one's for you guys.
Are you on LinkedIn?
I am on LinkedIn.
Do you want my bag? That one's for you. First time you're welcome.
Yes, sure.
My generation too. I did moisturize.
Yeah, very sophisticated.
Yeah, well, I think they might be. But anyway, pleasure meeting you.
The same company. Oh, yeah, we're brothers. We're all brothers.
I think UCLA has open for liquidity provider. I would love that, yeah.
Which
I love that. Yeah. I want to share knowledge.
Extremely fascinating.
I have too many. Yeah, right. I like to say
Open source, right? Some credentials, they're all open, so they're more expensive.
TLs and I mean, learning hands-on, I value experience.
Operational.
I think can't be expensive. Right? I have like 7 certifications. I'm taking an MBA, 2 bachelor degrees, like an accounting and design. Like, it doesn't mean anything, but it's my 16 years of experience working hands-on technically against me immediately.
We got it as a package.
I don't like it. I don't like it. And my picture and
Like, how long?
9 months.
that's good for me. It's me one day.
No, it's a full. No, I get the concern. There are controls in place, right, when we get your information. And I've looked at the controls, right, where we're checking what's required, what's not required.
Yeah, so
you have an on and off. Actually, monitoring data, right? You need to like when you do sign on, right, to do a withdrawal. There's like, hey, show me your ID.
outside.
Like Coinbase can
We're in New York. So
it was $10,000 for you.
okay.
Move it to MyWorker.
Not a US check the
Yes.
Like $100.
Yes,
One of the
yeah. Yes. Again, what happened here?
Absolutely. Thanks for coming.
Yes, I know that. We did papers like wrote a white paper like on for us at that time. So I know those papers. I have a
Make sure you do.
Yeah. You didn't pay for that.
No, we didn't.
Okay.
We didn't write.
Analysis.
Alchemy tape. Alchemy tape.
Well, there's a lot of
we don't talk about.
Mic check. All right.
Do you have
Oh, 45 minutes.
Not yet. No. Like, keep an eye out. Hey, I'm Arvin. Arvin, nice to meet you.
Just in the early days, though. But like 3 days in, I had a one-on-one with
Bye, Bob. Do you mind just telling anybody outside?
No.
Good job.
Thank you.
We don't do
I'll upstairs.
we do third-party settlements.
Yeah.
Hey, good job, man.
It's Michael Jordan.
Let's off.
Yeah.
All right, everyone, we're going to get started here in a second. All right, that was a second. Nice. All right, we made it to the third panel. I was excited for all of them, but I'm especially excited for this one. I'm pretty close with all the speakers, but this one especially, having the chance to get to know Eric from January and what he's done at USC has been fantastic. Knowing Ben throughout the past 2 years and just his support of what I've been doing, what the EA, just the conversation of Bitcoin, Web3, crypto on campus, just a massive champion. And then Damien, we were able to spend some time at Bitcoin Peer-to-Peer, which was an event in the fall where we held Study Bitcoin. And it was the first kind of collab between USC and UCLA on this front, but we're seeing the second one today. So welcome, Damien, Eric, and Ben. I'll let you kick it off.
Thank you. Actually, I think I'm mic'd up right here. Yeah. Oh, good. Yeah. Bitcoin is the great unifier across from USC and UCLA. So that's great. Thank you so much for having me here.
You're gonna hate me. I have a video that I want to
I was about to say.
I'm gonna tell you. I'm gonna take 1 second, or it's literally 1 minute. This is a quick video from the founder of the Bitcoin Students Network, Ella Huff. She's a graduating senior at Cornell.
Hi, everyone. I hope you all are having a wonderful summit thus far. My name is Ella Huff, and I am a graduating senior at Cornell studying Bitcoin, and I'm also the co-founder of the Bitcoin Students Network. Kyle kindly asked me to introduce BSN ahead of the discussion on Bitcoin for the next generation. And really, BSN is best described as a 501c4 nonprofit that works to foster a global network of Bitcoin students and clubs, or nodes as we call them, connecting students with opportunities and resources within the Bitcoin ecosystem, but also critically to each other. And today, our network spans around 1,800 students across 73 countries around the world. And students like Kyle, Damien, myself are dedicated to seeing Bitcoin be a part of the dialogue in academia. And so thank you all so much for supporting Bitcoin at UCLA. I hope you all have a great rest of the event, and thank you again.
All right. Well, that was to introduce the fact that Damien is the founder of the Trojan Bitcoin Club and Bitcoin Bruins here on campus. We're the two of the nodes in Southern California. So I'll let you take it away.
Awesome. Yeah. Well, thank you so much for having me. It's such a pleasure to be here. And I'm so excited to have the chance to ask these two panelists some questions. So first, introducing Benjamin Tsai. He's the co-founder and president of Wave Digital Assets. He's on the board of MetaPlanet, which is amazing. I just learned this like 20 minutes ago. And he teaches finance at UCLA Anderson, where he's an alum. And then we have Professor Eric Chung. He teaches at USC and also leads the VanEck Digital Assets Initiative. And he co-founded the university's first academic blockchain program. He also spent a lot of time in crypto-related startups. And I actually took his class this semester. So I can't say anything mean or he's going to give me a bad grade. So I have to be careful.
Grades are already submitted, so you're good.
Okay, great. I have permission to grill him. So I'd love to start off with you, Ben, just to learn more about what you do in the space and why it's important to you.
Yeah, I think we caught up a little bit earlier. There are a number of things that I'm involved in. I think in my day job is I run a crypto asset manager and we do quite a lot there. But I think this panel is more really about the next generation. So I'll focus on some of the other discussions. One is I teach crypto finance here at the Anderson School every fall. I teach the Master of Financial Engineering and also the MBA students. It's an introductory course around crypto and all of its machinations. We get into various different depth, and I share also some of my experience around the more practical side. I also teach a similar course with the School of Economics for the Master of Quantitative Economics. So that's the first part. And on the second part, I've been very fortunate to be involved with MetaPlanet ever since when they decided to switch over to becoming a Bitcoin treasury company. For those of you that don't know, MetaPlanet is a Japanese listed company. They were around for 16, 17 years as a budget hotel operator, and they were not very profitable or very good at operating budget hotels. So I think as of the end of last March of last year, they were worth about $6 to $8 million market cap, listed company. And from that point forward, they switched over to becoming a Bitcoin treasury company. They've been buying and collecting Bitcoin. They're the first one in Japan to do so, and still the only one that's focused on Bitcoin. And I could talk about more details of that later, but that's been a very successful switchover. Their market cap currently, 15 months later, is over $3 billion and growing. So it's been an interesting journey.
Go ahead, Professor Eric.
Oh, my intro.
Yeah.
My name is Eric, and I've been in the space for almost a decade now. And my first foray were entrepreneurial. I did 2 startups, which is how I got involved with USC. Advising them on creating the first blockchain miner program here in the United States. And, they asked me to teach the first smart contract development class. So that kind of kicked off my entire academic portion of my career. And currently I'm the managing director of the VanEck Digital Assets Initiative, which we'll get into more in just a little bit. But I have a big passion for the intersection of, new tech and education. Sparking curiosity, I think, is very important. In the future generation. So excited to dig in.
So I'd love to pose this question to both of you because you both have industry experience. Why teaching? Why is teaching important to you?
It's for the big money that we get from the universities. I'm kidding about that. I'm a graduate of the Anderson School. I felt like I got a lot out of the school. I was able to have a great traditional finance career coming out of the school. I spent 15 years in Asia in traditional finance. I felt like I did very well. It was a very rewarding career. So after that, I came back to the U.S. and called the Anderson School and said, hey, spent 15 years in Asia. I was a senior member of major firms. I'm happy to teach stuff here. And they said, no, we got enough people. So I'm like, okay, great, thanks. But a few years later, they actually called me up and say, hey, we heard you're in this crypto thing. Can you come and talk about this crypto thing? We don't really know what it is. So I came in, gave a talk. They said, okay, can you stretch that material out into 30 hours? We want you to teach a 30-hour course. It's like, oh, okay, I can babble for 30 hours. I'll throw in some guest speakers just to be sure. But no, we can do that. So this was 5 years ago, actually. This will be my 5th year teaching here at UCLA, and it's been quite good. And I know Eric's been teaching even longer than that, so I'm not stating that as an extremely long time.
Yeah, so I just wrapped up 7 years, which is not that much longer. But Ben and I go way back. So, when I first got into crypto, we linked up, and now here we are on the same panel. But for me, it's always been about, when I first got started in crypto, I had no idea, no network, no knowledge, no skill set, nothing. And I just kind of jumped straight into teaching. And the reason why is because I felt like if I really wanted to be on the cutting edge, I wanted to actually help create the next generation of builders and developers versus have to like always try to play catch up. So just put in the work in the beginning and kind of got to the frontier. And now I get to meet students like Damien, who's like doing some really cool stuff on campus and outside of the walls of the university. And that's just my selfish way of keeping up with all the newest things. Yeah.
Why do you think it's important for the younger generation to learn about crypto? Why do you think it's important to teach it? Also goes to both of you.
Well, I think crypto is the future of finance. You've probably heard this like all day today and also outside of these walls. But yeah, if you're serious about looking at new technology and how you might be, like maybe like teaching your kids in the future what the world is going to look like, this is a really good place to start with crypto kind of reinventing money. And, we even talked about how, Bitcoin is now the evolution of gold. The digital version. So you probably would have never guessed this, like 20 years ago, but here we are. So I think it is very important to, keep on the pulse and continue to learn all this stuff. Outside of the like the Bitcoin narrative, there's a lot of interesting stuff happening with crypto. We talked about stablecoins earlier, and that's been taking up all the headlines. But even beyond that, different use case advances outside of DeFi. Very interesting stuff. Yeah.
I noticed Eric and I are trying to talk really fast because we don't know. We know we don't have a lot of time, but I'm going to tell a long story around this. After spending 15 years in traditional finance, I came back to Los Angeles actually thinking about what I wanted to do next with my life. And I looked around finance, fintech, and so forth. I hate to say it this way. I think the US is such an entrepreneurial space that most people did most of the good ideas already and most of the mediocre ideas and some of the bad ideas already. It's really a crowded space to try to do anything. At that point, you're not going to go build the next PayPal or the next Venmo and so forth. Those spaces are already filled. Like all the niches and the sub niches of niches have all been filled. And I found it really refreshing when I got into blockchain cryptocurrencies. None of the niches are filled. It's greenfield. Every idea is a new idea. Every new thing you can try and you can do different things. You're not really limited by the traditional rules around finance. And that was very liberating for me. And I wanted to kind of provide that opportunity to the next generation to go and build interesting things in a new field as opposed to try to kind of crowd in the old field. I found my traditional finance experience to be very educational, but it wasn't really a place that was going to allow me to kind of do more entrepreneurial stuff. So because of that, I feel like the education part would be very good to have.
I'll also add, technologies like VR, AR, AI, these are things that have been dreamed up and thought about for many decades in science fiction novels, movies, etc. So we kind of have an idea of what that looks like in terms of form factor, how it benefits society. But something like digital money or, I guess like the earliest versions of Bitcoin with eCash and everything, these are all very new kind of ideas that, like Ben said, does allow for a lot of new opportunities to be taken and seized. So for me, just to get a little bit more personal here, when I first got into crypto, it was actually, just to be completely honest here, it was not because of like a philosophical alignment or, something like that. It was purely a strategic decision for me to enter this world where nobody knew what was going on. So therefore, me with no edge could kind of compete with people who have only just a little bit more edge than I have. So I think crypto is still kind of in that. We've obviously crossed the chasm towards more adoption, but it's still, I would say we're still kind of like in the meat of the early majority of the adoption curve. So still a lot of opportunities here. Yeah.
I'd love to know more about what you're doing with the VanEck Digital Assets Initiative, how it got started, and what you're working on now. Yeah,
so just to talk a little bit more about the program that I'm leading at USC, it's called VanEck Digital Assets Initiative, or VEDA for short. And, basically what we do is we help coordinate and catalyze digital asset innovation on campus. I'm actually a Bruin, so I've started my efforts here at UCLA. Unfortunately, didn't gain a lot of traction. And USC, they said, hey, why don't you come hither and join us? So, that's why I landed there. But by the way, if anybody wants to change my circumstances, please, feel free to make something happen. But anyways, to talk about VEDA. So Jan VanEck has been a pioneer, in the finance space for a long time. And Vanek grew in notoriety, decades ago because of the gold trade, and now they're replicating that with Bitcoin, taking on the digital gold, narrative. And one thing I really appreciated about the Vanek gift to USC. By the way, that gift was announced a few months after the FTX collapse. So for them to commit to that, digital asset innovation on campus, even after all of the crazy implosions that have been hitting the headlines, is to me a very brave and bold kind of stake in the ground, saying like, okay, we have conviction behind this technology, and so we're going to weather through a lot of storms in order for us to, be first and promotes those entrepreneurial efforts. Jan himself is also very he likes it when people take risks, and because of my background, not necessarily coming in from the traditional academic routes, coming more from the entrepreneurial side, it was just a really good fit for us to then start to catalyze curriculum, research, and community development on campus, coordinating all of those pieces together for us to then, have that really sharp spearhead for us to, really innovate. So, yeah.
I'm going to jump in, and I hate to compliment stuff USC is doing, but Eric's doing an excellent job, and the center is actually very good. I was fortunate enough to be invited to one of the dinners, and it was really interdisciplinary, which I think we at UCLA need to work on a bit more. I mean, we sat next to surgeons from the Children's Hospital that's part of the USC network, and we're talking about doing blockchain and medical data privacy on the blockchain, right? That's the type of conversation I do want to have. That's the type of progress I think people should be looking at. And, I'm now starting to get involved in that, which once again, we'd love to have had that happen in UCLA, but, I'll work on that.
It's interesting you're both talking about this friction. What is the university pushing back on? What is the argument from both USC and UCLA?
Well, I'll say, from my experience here at UCLA when I was trying to get things started, it was largely because at that time, it just was not a popular topic. If you're associating yourself with something like Bitcoin, you're associating yourself with fringe groups, something that, is typically connected with, money laundering or drug. At least that was a narrative, right? So it was very difficult for academic institutions to get behind that with full conviction. I would say now it's definitely changed because the sentiment has clearly shifted. The Overton window is now moved, where if you don't associate yourself with something like Bitcoin or digital assets, then you are starting to fall behind. So we are in a very lucky time period to have been witnessing this transition. But I will say, a lot of the other things that kind of block innovation is really just more operational than like belief at this point.
Yeah, I think it's less about the overall positive or negativity around crypto, but I think any efforts at university really requires having a champion who's ready to kind of take it on and push it forward, and sometimes multiple champions. I think, if Eric was still at UCLA doing his effort from the engineering side and I was doing it from the business school side, we probably would have gotten a lot more done. But, to be able to coordinate that does become difficult. And I spend the bulk of my time I spend at UCLA is really just to teach. I have office hours, but outside of that, I don't get a chance to spend that much time here. I'm mostly working on my full-time job and various other things that I do, and I end up going to conferences and so forth. So, it is the amount of effort people have to put into these efforts and having that be coordinated.
Ben, I'm curious, you were in the traditional finance space. What clicked to you about crypto?
So, kind of telling another story very quickly because I know we are running on time. I started my career in structured products. I ran structured products for Merrill Lynch across Asia, and that was for both equity and fixed income. So I worked through a lot of different assets: equity, FX, rates, and credit, and so forth. Near the end of my career there, I actually switched over to running the commodities desk. So I was head of commodities across Asia for what was at that point Bank of America Merrill Lynch. So had a lot of exposure to the commodity space. After that, I went over to AllianceBernstein. I was head of alternative investments. So I was doing infrastructure debt. I was doing all sorts of exotic things like hedge funds, equity long short across Asia, and so forth. So the point of the story is I was exposed to a lot of different assets. And when I got to crypto, it just felt like the next asset class. It was something that finance will at some point accept and absorb and use and do. Not sure if everybody would agree with me here. And I think some of the crypto guys, when I say that, they get a little uncomfortable because they like to feel like, no, it's the new thing. It's different, right? But from a finance perspective, it is another asset class that, we're looking at. It even has kind of a similar growth. When commodities first came on, if you needed to do something in commodities, you call some little bank in Texas, you get your trades done. One day, Goldman Sachs went and bought J. Aron. Merrill Lynch bought Entity Coke from the Koch brothers. And all of a sudden, all the major investment banks are now in commodities. They already had the client base, had the corporate clients, and they were making a lot of money from commodities. It was just a product they didn't have on the shelf. And from there on, people invested in commodities. There was a futures-based ETF that was launched, and people loved it, and then people hated it. They wanted the spot ETF, and that came out, on gold, on oil, and so forth. And we've had the exact same story play out in crypto. We didn't have ETFs. People wanted to get involved. And then there was the futures version. People wanted more. And then there's a spot version. And over the past year, you've seen the success of the spot version of the ETF. It was extreme in its rise. Probably the best ETF product ever to have been launched. So, from my perspective, it's just another asset class, if you want to think about it that way. And that's what helps me drive, what I do a lot of times. My guess is at some point the investment banks will drop a crypto trading desk. It'll probably be between commodities and FX, because I think that's probably the closest to asset classes it'll be. And we'll kind of see how it goes. And that's the kind of the crypto 2.5 version of that. And there's obviously the on-chain version of that, which is new, innovative, and very different. And I do that in my new asset management firm. But certainly the kind of the way I wrap my head around it is really looking at it as a financial asset class.
Professor Eric, we've had this conversation in your class where us students were talking about how we were worried because we couldn't buy houses, and then you chimed in saying like your generation can't buy houses either. What is the generational fix that Bitcoin does? Why is it so important for young people?
Well, I don't know if buying Bitcoin will fix, the housing problem, but assuming that we all here in this room are believers of, Bitcoin becoming the next really big, or not the next, the current really big appreciating asset, assuming that you treat it kind of like the way Buffett treated, indices back in the day, or index funds, sorry, then maybe, 10 years from now, you might actually be able to buy a home with one Bitcoin, right? So, I don't know. I think from a asset appreciation standpoint, that's probably what I was, kind of tongue-in-cheek getting at in the classroom. But maybe Ben has a more sophisticated answer.
I'll give a different but similar answer. I think Bitcoin is a way potentially for younger people to generate a lot of wealth without kind of climbing the corporate ladder and doing it one step at a time. Not everybody's successful, so this is the same as the entrepreneurship route. So I don't want to make it sound like it's easy, but there are people that have generated a lot of wealth. One of our former colleagues, he was a co-founder of Frax, and as he was graduating UCLA, he was already extremely successful as co-founder of Frax, and therefore, I think he was ready to retire on the day of his graduation. So, I'm sure he can afford a house. I think he said he bought a house for his mom.
He actually pitched me Dogecoin when I was rushing for his fraternity, and I was like, "What is this stupid Doge thing? I just want to build a startup."
So, I think it does present an opportunity that's not normally available. I think in traditional finance, there are a lot of existing barriers like becoming an accredited investor and so forth before you can access some of these opportunities. And even those opportunities, you're talking about, hey, you can generate consistently 20, 30% per annum on money you already have. Well, what if you don't really have a lot of money to begin with? And the 20, 30% on not a lot of money is not really going to help. So I think that it is a new opportunity, a new asset class, a kind of the next wave of things to be able to do. So I see that as an opportunity on a generic sense. So I think there's also a question of, is getting a house kind of the goal or the next thing to do? In Japan, they're selling houses for like $10,000, $20,000, right? So, what does that mean? And kind of, you can reconcile that with, the value of owning kind of an abode and whether that makes sense or not. But anyway, story for another time.
I'm curious, if you guys could both redesign any part of higher education, how would you do it and why?
I'll jump in there. I have a son who's graduating college and a daughter who's graduating high school, going to college. And I think the biggest part that was missing, and I continue to think that, is that there is kind of a lack of, practical skills that are taught. And the biggest practical skill I wish our kids were taught to learn is really about finance and money and managing money and how to think about money, investments, and so forth. And that includes how to manage your taxes, how to file your taxes, how to optimize for taxes, and so forth, which after many, many years, I'm finally starting to think that I have a hang of it. But, things like that are kind of fundamental to living in a country where there are high taxes, in a country where, you do need to manage your investments, you need to manage your money, you need to do this and that. And, things are complicated, but those are things that you need to learn. I remember when I was in middle school, I actually took home ec class. It taught me how to do laundry and make pizzas and sew even, right? So there's some value to those skills. And, I think that some of and I'm not equating the two exactly, but there are some skills I think that, on the finance side, I think people are quite lacking in terms of thinking about, finance and so forth.
Yeah. As somebody who is trying to programmatically kind of introduce new things into the university system at USC, I have a lot of strong opinions here, but I would say probably the biggest one is a larger focus on experiential learning. For all of us growing up, maybe for the millennials, it's not as hard for us to sit in the classrooms, and just focus, but especially for the newer generations, with social media and all of the whatever, you've heard this thing many times before, but it is actually difficult for you to capture people's imagination and attention for a long time unless you're able to bring in something that's relevant to their lives and have them directly experience it. So for example, this is something I didn't do this semester, but previous semester, what I would do is I would actually spend one day in my class. Instead of lecturing, I load up a wallet with $100 and I would actually go through all these different DeFi platforms so that my students understand, oh shoot, he's not just talking about, what does the AMM curve actually look like, but we're clicking buttons, together. I'll be like, hey, there's this, that was when a project called Parcel was new. I was like, hey, if you guys want a long or short, real estate market, let's say Miami, what are your opinions? And they'll be like, okay, let's just go long. I mean, probably unfounded, but the whole point was, they're able to kind of see exactly what's happening in the world of DeFi without it just being theoretical, and they're actually able to experience that. And to kind of go off of what Ben said, something that I really appreciated in 5th grade when I was in elementary school was there's this bank, I forgot what it's called because it went down during the financial crisis, but they would come every month and they would have these workshops for us 5th graders as we're getting ready to go to middle school. Hey, this is how you open up a checking account. This is how a credit card works. Just very basic, personal finance stuff. And I think as we're entering, this new era of finance with crypto and Bitcoin, all of this stuff, that needs to be introduced, maybe in venues like academic institutions like UCLA and USC. I think that would be incredibly helpful, where you have some sort of, you learn how to set up a wallet, you learn how to manage your private keys. Hopefully in the future, you don't even have to deal with private keys because, security just gets that much easier. But, you understand kind of the basics of this new financial rails created by crypto. So I feel like that, those are things that I would definitely strongly push for and am currently pushing for at USC.
I would have liked to do that in your class. That's unfortunate.
Watch me lose $100.
Yesterday in my class, I opened up my NFT portfolio and showed them all my failed trades. I didn't let them trade it, but we talked about it the whole time.
What message do you want to give out to the next generation of builders on Bitcoin? What do you want the next generation to take away about Bitcoin?
Well, I'll take the easy stuff, so Ben has to actually think. But I'll say, it's still not too early, or sorry, it's not too late. So it is, it's not super early anymore, but it is not too late. So definitely, what I'm seeing right now is a shift in the last 7 years. Students who were taking my crypto class were, in the beginning, it was this very strong curiosity because that's what it demanded, right? Very high barrier to entry and not a lot of accessible documentation tools, etc. Now, students are actually starting to look at this domain as a viable career path, and I think like that transition kind of going from this, again, like this fringe kind of association to, oh, shoot, like if I do this, I'm actually innovative and maybe ahead of the curve against my peers, is something that I really want to emphasize. There's a lot happening, whether you are in the Bitcoin side or you're looking at other, alternative assets. I strongly encourage you guys to really dive in and explore.
Just really more to comment on Eric rather than answering the question. I think, I have students that come to me and ask about career paths and things like that. And also along with working with my son, talking about his career as he graduates college and so forth. I think what I've realized is that a lot of the more traditional fields, it's the seats are actually limited, and those seats are decreasing with the advent of AI, increased efficiency, and so forth. What we're seeing is massive hiring on the crypto space. It is actually a great place to start your career and so forth. I don't think I was saying this a few years ago. I felt like the organizations were not as mature. I told people, spend some time in traditional, learn kind of the basics before you kind of jump into crypto. But I feel like that, the market has matured enough where I wouldn't mind recommending people to get into crypto and so forth. So I think that part of it is very good. I think in terms of just back to the original question of, what I would recommend people to kind of look at as they build. I think the phase of really the crypto bros or the very secret society of a few people holding all the keys and all the knowledge and so forth, I think really is over. I think it's really about when you build, you should think about UX and how to get more mass adoption, how to make it easy and how to make things going forward. Because I think that access, that availability of access will be the part that generates value. You look at the protocols and tokens, especially Bitcoin, right? For it to be easily usable, for it to be accessible, for there to be a community around it. That's what's, creating that value. And for those that are not able to build community, they're not going to have a lot of value. So certainly think that, that component is very important. And that is the power of a lot of these blockchain projects, and definitely the case for Bitcoin.
By the way, I'll also add, something that's nice about crypto, which is kind of similar to AI, is that it is an underlying technology that is not specific to a particular domain. So what you can do is, even if you're passionate about, let's say medical space, right? You could always apply some of the tools that crypto provides, maybe in the domain that maybe you're a little bit more inclined towards. So you kind of get this ability to not have to box yourself in, but typically alpha is at the intersection of two or more domains. So combining and pattern matching is often a little bit more lucrative unless you are literally at ground zero. So that's another kind of insight that I'll share with you guys if that is something you're looking towards, after graduating.
Mm-hmm. How are we doing on time, Kyle?
Q&A?
Great, yeah.
Yeah, so first of all, thank you, because you are bringing an academic perspective to a world that is still behind. So I want your opinion about, I know you don't teach microeconomics, you teach specifically crypto asset or finance, but how you deal with the system that is still based on Keynesian economics, on debt-based economics, while, Bitcoin and in general, DeFi is teaching completely, going in a different direction. So how you deal with this with colleagues that are still, talking about, we need inflation, we need, a debt-based system, with this other part that is completely disruptive for these systems?
I think this is an interesting conversation. I think it'll require a long time of discussion, and we might not come to a conclusion after that long discussion anyway. But I think it's very interesting. I am not a believer that Bitcoin is in a completely separate universe and you can drop all the historical stuff and you just pick up Bitcoin, everything is dandy, and we just ignore all the past, successes and failures and mistakes that we've made. I feel like finance as an industry is really built upon layers of good and bad, all the fraud, all of the regulations and so forth. So for everything that I think, crypto people are against, there was a reason why those things were set in place, and they were there to prevent something or other. And if there is a crypto way to remove that barrier or to make it more efficient, I think that is a really good way to look at it. I think somebody else I think 2 panels ago mentioned making AML KYC efficient. I think that's going to be a big topic. And that comes from, adding privacy functions to blockchains, which is the recent 5th generation blockchain trend. Once again, another conversation we can have some other time. But overall, I don't believe that we've found some nirvana where inflation doesn't exist or anything like that, right? So I think it's really more of a matter of, now that we have tools like Bitcoin that's available, how does that change our current prospect? And I think, part of it has to do with the fact that now that we have Bitcoin, it's kind of keeping a lot of currencies more honest, because you now have a different benchmark you can look at the world. And, when people print too many dollars, relative to Bitcoin, maybe that doesn't make sense. The rise of Bitcoin, you can say it another way, it just reflects how much, that there's too much fiat currency around. Bitcoin is Bitcoin, right? Is one way to look at it. Once again, there are many different ways of looking at this, and, we can talk on and on. I'm not sure there's an answer to your question, but thank you for the question.
Of course, thank you.
No, yeah. You over there?
Oh, hi, yeah. I'm a professional investor, but I trade equities instead. I have a question that might sound stupid. So it seems like Bitcoin has a hegemony in the market because it had a first mover advantage. As far as I can understand, I'm sure there's more to it. What would prevent a new fad coin or some new coin in the future from taking over Bitcoin's predominance? Or is that possible once the safe coin thing passes soon? The Genius Act.
Here's my unsophisticated answer. Okay, I don't think you can get better at crafting the Bitcoin origin story than you can, as it has played out with Satoshi, and the way that proof of work works. It's crazy. So I don't think it's just a first mover advantage. I really think it was just set up in such a way that just like kind of breaks every other mental model of how some sort of like new asset class will be born into this world. So
I'm generally agreement. With that said, I think the world actually ran on silver before it ran on gold, and then it went to gold and it never came back. So, is Bitcoin gold or silver? I would like to think that it's gold, and it'll probably be staying for a while, and it'll be there. People traded platinum, people trade base metals, people trade oil, people trade other assets. It doesn't mean that gold goes away, right? So that would be generally how I would look at it. With that said, I'm less of a Bitcoin maxi than probably most people in this room. I do believe there are other classes. I'm not necessarily sure that they will ever outperform Bitcoin in terms of performance or relevance or store of value, but store of value, I think Bitcoin has really won that race and is done. With that said, I'm also a big believer in using the blockchain to do a lot of things, whether that's finance, whether that's enterprise use, and so forth. And that's not what Bitcoin is designed for. I don't necessarily think that we should strive for that. And there are other Bitcoin, other blockchain technologies that are being developed. I don't think the die is cast on who's going to be the winner of that race for other uses, and that's all open for a conversation. So I would leave it at that.
I co-signed that. Yeah.
Oh, and he co-signed it, so it's all good.
Yeah, I have 2 questions, but I'll just pick one. So I'm a master's student in quant finance. I spend a lot of time on generating alphas and trading on ideas on traditional finance and equity space. So to me, the crypto market seems like it's still a new place, as new space now. A lot of people are trading, so sometimes a lot of opportunities and inefficiency within the crypto space. So based on your teaching experiences, what are some ways for me to learn more about the crypto space based both in like a trader's perspective or just someone with curiosity in crypto?
So I'm going to take my teacher hat off and my Metaplanet hat off and put on my Wave Digital Asset hat. We have a team of traders onshore, offshore. We trade crypto. We do algorithmic stuff. We do all sorts of different things. I would say that as a start, you should just jump in, try a few things, start reading the news, start kind of getting in the flow of things. There are many, many things that can be done. Goes back to my comment about this being a greenfield. I think most of the more advanced technology and ideas and things that are available in traditional finance haven't been fully applied to in crypto, and they need to be modified for crypto also. So it's not just a straight up, oh, I got an algorithm, let me just apply it to Bitcoin. With the right tuning and so forth, I think there's still a lot of alpha to be captured in crypto, whereas most of that alpha is gone for standard personal investors in this space, because you have teams and teams of PhDs that are arbing out a lot of stuff in the traditional space. So I think that that's a great opportunity. I think there are also a lot of structural inefficiencies. We trade onshore, offshore, CeFi, DeFi, OTC. We trade on-chain, off-chain, and we are faced with various barriers to access different markets and so forth. And those barriers are also opportunities, because they form kind of arbitrage opportunities that you could potentially capture a return on. And the final thing I'll mention, which actually was discussed in the first panel, there is not enough fiat in the crypto space. That's why the lending market is broken. That's why, the crypto is being, people are being very creative in crypto in terms of like recursive lending and pledging your tokens and then borrowing again and then pledging again and kind of doing a lot of these things, because there's not enough fiat in this market. If there was enough fiat, if you just look at risk return, the lending rate, like the first panel said, the lending rate should be like 2-3%, because that's the amount of risk you're taking. It's a super liquid thing. If the client defaults, you just dump his token in the market. You get your cash back immediately, right? But we don't charge that. We charge 2-3 times, mortgage rates. Can you dump a house overnight? You can't dump a house overnight, right? So, I mean, so from that perspective, there's that mispricing of capital. With that said, do I have $10 billion to straighten that problem? I do not. And there isn't anybody who's got $10 billion, $1 trillion who's willing to go in and capture that spread. If there were, we'd have enough, fiat in that market. So separate discussion, but there are a lot of interesting opportunities in finance. Happy to discuss further after the session.
And I'll answer that in a slightly different angle. So I would say, in terms of approach, you definitely want to be really good at reading the chain. Everything is on chain. And if you're able to analyze that, figure out how to make sense of all the gobbledygook and turn it into, actual English that is applicable. Right now, still, there are plenty of people who understand when they get into the blockchain world that everything is on the blockchain, but they do not bother taking a look at the blockchain. They don't know how to read it. They don't know where to go. So I would say that's one really big thing. The second is, how do you look at how people tell stories about crypto? And one of the most underutilized tools, in my opinion, for the story aspect is Grok. Everything happens on Twitter, and you want to use Grok to literally analyze anything, at least from like a sentiment and, like a narrative standpoint, to give you a lot of cut out a lot of the hours that is required when it comes to research.
It's funny, we were just talking about this with the trading team this morning. We were talking about scraping Twitter for kind of sentiments and being able to trade around that. I think Twitter, they've modified their API, so it's more difficult to do that. I think they did that intentionally. The other thing we were talking about today is actually scraping from Truth Social, and I think that's probably a better place for you to get alpha, which is the unfortunate reality that there's a lot. It's a lot more political driven now for some of the tokens within the crypto space.
I mean, now that the alpha's out, it's going to decay, so you better act on it,
Good idea. I'll try to implement it soon.
We're going to pause it here just because we're going to wrap at 5. I believe both of y'all will be upstairs.
Yes.
All right, so if you have any continued questions, we can continue that conversation upstairs, but please give a round of applause. Thank you. As well. After our conversation, I got you a little Ferrari and Italy on that.
I grew up 5 minutes by silver was the current.
Oh, yeah. check.
I'd like to see somebody do corporate finance.
All right. I was just going to wrap us up, just do a quick summary before we head out of one thing that I learned from each of the speakers here today. If you guys could continue that conversation upstairs. Wink, wink, hush, hush. What do you count down? 1, 2, 3, clap? How does that work? 1, 2, 3, clap. All right, yeah, there we go. That'll get people's attention. Hey, that works too. Thank you. So first of all, I just wanted to appreciate all you guys coming today. We are at 5 o'clock. You guys don't know how much work went into this. We got happy hour